They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. They shall run and not be weary. They shall walk and not. Who goes with you? He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me.
Yo, good morning, everybody. What the hell is happening here? It's all like not centered. Yo, can y'all hear me okay? Hope everyone's doing well. Fix this real quick. There it is. Yeah, let me know in the chat if you can hear me okay. See everything okay? Good morning, George. We definitely got some interesting stuff to talk about today. You guys could see kind of what has changed from this chart. Those of you that have been with me for a while. Seems like we may be seeing some changes, right? Okay. Clear. Okay. All right, perfect. But yeah, so before we get to any of this stuff, we got to get into some of what's happening here. Okay, let's go see. Look at some headlines. Oh yeah, that. I'm not sure how I feel about that, honestly. I don't know, you guys. I don't know. We taking Greenland? Is that what we're gonna do? I don't know. Put tariffs on everyone that don't agree. I'm not sure how that's gonna do with the relationships, but I don't know. We'll let it play out. All right. Up to this point, we know that we got to let Trump do what he's gonna do. See how things play out. Because generally, if it seems very exaggerated, a lot of times it's not. Not all the time, right? Sometimes it is, right? But I don't know. We're just gonna have to see. Hopefully no intense unintended consequences come from this. But we'll see. See what happens. So Europe said they will not take another tariff hike lying down. Yeah, we'll see about that. We'll see about that. We subsidize so many countries, including pretty much all of Europe, with so much money. We'll see what they pull out of the hat. There was a threat going on about them dumping bonds, which could be a problem. If they do decide to do that, I think that's like their only option. If they just start dumping bonds on us, that'll end up being very, very dramatic because, again, the value of the dollar could really take a hit. The value of the dollar is based on, obviously, the petrodollar, right? And how confident people are in holding our bonds, you know. Those are the things that kind of back it up. I'm sure there's probably other things potentially too. I'm not like an economist, right? But from what I've been able to gather, that's part of the reason too why we have put so much aggressive pressure on some of these oil countries, or like especially Venezuela in our hemisphere. Apparently, there's oil out there in Greenland too. Greenland is like right in the middle of the Western Hemisphere and Russia. So, and submarines from China and Russia are constantly over there, battleships and all that. And Greenland doesn't do anything about it. So that's, I guess that's his reasoning behind this stuff. Like why he thinks we should own it, because they themselves can't protect it. And if something happened, who knows what the NATO countries are going to do? I mean, because if you think about it, some of these countries, like Britain, for example, I think they have 70,000 active soldiers. That is like that's so tiny. They have good tech, but with the current leadership, I don't know, man. I don't know. Same with France. Same with, some of these other countries. Like, you think Putin's scared of Macron? You think he's scared of Starmer? You think he's scared of them? Um, all of them together, obviously, that's kind of the power in NATO. I think it's like 60% of the military power is in NATO in the whole entire world, maybe more. But a large, huge. Have you seen the chart of like the NATO countries, like the pie chart that has like the NATO countries, and it slices them up, showing like their percentage? The U.S. is like 3/4 of the power of NATO, which is insane. Like, and the main reason that is because obviously we have the hugest budget put towards the military, but it's also because uh, these other countries haven't even touched the 2%, let alone 5% mark when it comes to their piece of the pie, right? They're supposed to be putting in 2 to 5%, at least 2% before Trump got here. And they didn't even want to reach that, right? They have all these other things that they're doing internally and, whatever else that has nothing to do with protecting their own country. They just have for decades thought that the US is responsible for the world's security. And we are a big portion of it, but come on, bro. Like, we're 39 trillion in debt. Let's go look at the US debt clock. Okay. 38 trillion marching towards 39 trillion. We have more of a budget than probably 90% of the whole world combined. That's insane. In debt. Nothing, if we sell all of the assets in the whole country, every company, everything, we still would not, well, we probably put a pretty large dent, but that's selling everything that America is. That's how deep this debt is. So for other countries to continue to believe that it's our responsibility to, first of all, subsidize all their military or most of it or a lot of it, let alone all these other things that we pay for no reason. I mean, there has to be someone like Trump to stop this, because this is a debt spiral. The country's future, us as the free world leader, us as a free country at that, depends on how this debt gets managed. And of course, there's little plans that everyone has, like, shifting it to crypto or shifting it here or shifting it there. But bro, we don't got money to be doing all this stuff. So they have to pull their weight. And any of the excuses that they make, they can shove it up their ass. Like, dude, because it's insane. As an American taxpayer that pays a lot in taxes every year, ridiculous amount, because I live in California. I mean, this has to stop. Like, this has to stop. Like, it really does. It needs to come to an end. And these countries need to man up and do what they need to do. Stop worrying about all these woke things that they worry about and spending all this money on this and that. Like, you can't take care of everyone if your house isn't taken care of, you know? And that's just the way it is. They don't like to hear that, because votes will be taken off if they cut this or cut that. That's why not even Trump can cut like dramatically to the budget, because we have like a large portion of the population that's been subsidized by one side of the political realm. And this is like a reality thing. It has nothing to do with like whether you like one side or the other. it's just like this is really bad. We can't even like you give people money, you give it to them enough, you subsidize their lifestyle enough, and make them live in a more rich lifestyle than 90% of the whole world. Like the poorest people in America are rich in other countries. Like they're living lavish. They got water, they got food, they got access to free food, high end stuff. Like it's insane, you know. And so if we do that enough, which we have, which is why we're in this predicament, um, you can only do it for so long. And then when you cut it off, the backlash is what you see in America right now. You know, like we let all these people into the country, and it's like we can't pay for them. And 90% of them, or well, in Minnesota, 78% of a certain population is on Medicare and Medicaid and food stamps and all these subsidized things. While this is just constantly going higher. That's like you over leveraging your credit cards and then going and buying all the homeless people food. While you're destroying yourself, you're going to end up being on the street with them unless you get your house in order, then look to help others. You can't help others if you're not even helping yourself. We're at a point where we can't help even ourselves right now if we keep this up. And helping ourselves is also adding to the debt right now, right? And we can't cut things off, so it's causing craziness. And this is directly impactful to the US dollar viability. Like if we go completely broke, who's going to invest in America? One of the only things that's really saving us, and that will probably be the saving grace for us, is cutting, regardless of whether it hurts these politicians, which even Trump doesn't even want to be hurt that much. It just shows you why this has continued. It's because of the votes. But it's also the market, right? The U.S. market is bigger and stronger than any other market. And that's why everyone still wants to invest in us. That's why America is what it is. The consumer of America is, again, richer than most countries. Even the poorest of Americans are richer than most countries. So again, this is something you got to keep tabs on if you trade U.S. assets, because this directly affects our ability to be America, right? We're the richest country, but we have the most debt. And that's a debatable thing if we're the richest country. We're rich in terms of our tax base. We're rich in terms of technology and, innovation and freedom and all these things. This is a silent killer. It's not so silent anymore, but this thing can really destroy this country. And so that's why this thought process, when you think of the social issues, I mean, you got to think of it from this element. If you didn't have money, would you be forcing yourself? If you were damn near about to be broke and homeless and over leveraged to the max, sacrificing your children's future with the things that you're overspending on, and you're handing stuff out, would these people still have the same pushback if that was them and it was their money? It's easy to spend other people's money because you don't have an emotional attachment to it. That's why these politicians make me sick. And that's why we're in this situation. But Trump can't even be that someone. He's doing very good things. Some stuff is, overly aggressive, but hey, if you have a problem that's big enough, you need to have really, really dramatic solutions. At least that's how I think about it. And yeah, stories that are sad and whatnot, but dude, we're in a sad situation if the US goes down and all of us end up being on the street and we turn to a third world country, we get removed as a reserve currency, and we can't pay this debt off. And everyone loses faith in America. Freedom starts to get trampled on. It's just, honestly, it's kind of debatable in certain states about the freedom aspect of us being the freest country as an American and having friends outside of America all over the place. Not only students, but just friends that moved, went abroad to many different parts of the world. There's arguably more freedoms in certain countries than there are in some states, like California. I mean, I can guarantee you this rate's a very low portion of the totem pole. But again, any freedoms get removed if you can't pay this debt, because this pays for everything, and there's an argument that a lot of this, maybe like 30 to 40% from the Treasury Secretary, could be fraud. Like Minnesota, $9 billion in fraud, proven fraud. It's not even a debate. Like, it's proven, the data is there to look at. And then they're finding new stuff every single day in all these other states. I'm waiting for California to be looked at because I live here. But yeah, all this stuff as traders, we got to be able to be aware of this. You don't have to have too strong of an opinion, right? If you're outside of the states, or even if you're in the states, you don't want to be obsessively, just making your life miserable over it, because you can't really do much except vote. So you better be going and voting for things that you want to change. But this does impact our ability to have a good economy, our ability to have all these nice things, our ability to have status in the world. And we're not the only country in this massive debt, but of course I live here in America, so that's what's most important to me. But yeah, so if you guys never seen this before, this should be shocking to you, right? You guys probably have seen it, but man, oh man, this shows you that, like, what is happening, what's really going on, right? And depending on how this is managed, if something bad happens about this, like we can't pay our debt, what do you think is going to happen to the stock market? What do you think is going to happen to it? You think that every company is going to be doing absolutely phenomenally when America can't pay its bills? When all these things get shut off because they can't pay it, because we just can't borrow more money, because our credit score gets too low in the world, which has already happened. It just dropped like 3 times in the last maybe 6 quarters. Our credit rating, that affects our ability to borrow money. So yeah, exactly. You've never seen it before. Yeah, this is why these social issues in America, for a lot of one side of the aisle's voters, they could care less. I don't care about these things. You can't have any of these luxurious beliefs if this ends up crushing everyone. And people are very financially illiterate in America, unfortunately. And there's a lot of things that people just don't care to understand. And they have these luxury beliefs, right? They have this privilege, supposedly, right? So these a lot of the social issues in the West are privileged beliefs. Do you think people in countries that are have a lot harder of a lifestyle worry about half the crap that people riot over? Right? Like, I mean, it's just, it boggles the mind. This right here is something that'll make it so you have other things to worry about. So it's best to worry about this, at least in my opinion. But people will be people, right? And some people are more well off than others, and some people have never been down homeless like I have, or like a lot of people have, and have gotten out of it. They've never had that feeling. They've never had that struggle. So I guess they could say that they are privileged, but a lot of people are not. And this is what people need to focus on, because this means something personally. Because if you're personally in debt, if you're personally going through hardship, this should wake people up, right? It should be like, or get your eyes wide open to what's truly important, Yeah, and Tony said, yes, for said scary. Yeah, it's scary, bro. I look at this every single week, and I'm like, dude, 'cause Elon Musk got me really looking at it. And of course, they attacked him over trying to cut things. How do you get this to go lower? How do you get your spending to go lower? You have to cut stuff. Like, look, they just want to keep spending. It's both parties' fault. They both spent, so they're both really, really at fault for things. It's not just one side or the other. But one side's starting to focus on it more than the other. The other just wants to spend money and subsidize and pay people that come to the country so they could vote for them, and whatever the case may be. Just spending money just nonstop. We don't have unlimited money, although it seems like it, because these people are mortgaging the future of my children's 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 future, right? Like that's what this is doing. Every time they borrow unneeded money and they waste it on dumb crap, that's what they're doing. And that's why people have woken up and are sick of it, because now a lot of people are aware of this. So yeah, it is what it is. It's very, very important, though, to keep this in mind. Luckily, we have another revenue coming in, which hopefully stays, because there's a fight against this too now. They're trying to get the Supreme Court to make it so we have to pay all this back to all these countries when they tariff us. So it's like, let's just make it unfair for America, right? We've done bad things in the past. I'm not going to sit here and say that we're innocent, but every empire has. So it is what it is. You got to take the good with the bad. And if you don't like it, you can leave, right? That's the beauty about America. People that don't like this country, the door's open. You know what I mean? And I don't have respect for people that hate this country and live here. You can disagree, but, it's getting real toxic lately, unfortunately, so hopefully God could fix this because it's the only solution in my opinion. But hey, so yeah, I just wanted to point this out because of what we have been kind of seeing and what's ahead of us, ahead of a government shutdown that's coming. And one side of the aisle is probably going to try to make it so the other side is forced to pay for these things that are completely adding to this debt. But that's something that's coming, right? Ahead of the potential shutdown, probably a guaranteed shutdown because there's going to be no agreement because no one can get along. And everybody is, one side's unreasonable in terms of the cuts. Like they don't want to cut because it'll make them lose voters because then it'll hurt their voters who are being subsidized, which shouldn't have been subsidized in the first place. So that shutdown ahead of what we just saw, or I'm going to keep that there so we can refer to it if needed. Let me see. January 21st, yes. Oh, okay. That's kind of strange. The arrow, I guess they only show when the times are, when the things are timed. That makes sense. But yeah, the World Economic Forum, we have a speech from Trump. He's basically going to go tell everyone that's there who's trying to basically have all the problems in the world continue because it benefits them, like the border thing. He's going to tell them that they can go F themselves and that, he's probably going to add a bunch of other things that I probably won't be able to anticipate. It's kind of the way it is, the nature of him. There's a bank holiday on Monday too. It's Martin Luther King Day, so bank holiday. So it's probably going to be a limited day, if I'm not mistaken. We'll see. I think last year they didn't close it entirely, if I'm not mistaken. We'll have to see. But yeah, so the first 2 days of this week, Monday and Tuesday, I'm not really going to be too interested. I'll have a live call on Tuesday here on YouTube. We'll have to see and monitor what happens. They may be waiting to set this up for the PMI. PMI is pretty dramatic. We have a GDP announcement. That's interesting. This is when we could end up starting to have problems, right? Yeah, Tony, futures close early. Okay, perfect. Yeah, I wasn't sure because last year, I can't remember. There's one of these bank holidays where it didn't close at all, and it just kept going. I can't remember which one it was. It may not have been Martin Luther Day, but we'll have to kind of see what results from that. Again, we're ahead of a government shutdown. We've just seen the bonds and the indices take a pretty nice little nosedive. Okay. But of course, we'll get back to the chart in a little bit. But yeah, this is kind of the landscape. Again, every time you look at this economic calendar, you think Power 3. You got to think, what is potentially going to be the profile for the week? If you haven't got to studying weekly profiles, I encourage that you do. It's something that you will eventually, I say you should require to learn, like you should require it to be learned. Plus daily profiles, it's profiling, right? And it's something that repeats. And there's different variations, so you can kind of get that anticipation skill relative to what certain news events are showing up. But you got to think Power 3, right? We have the Sunday, Monday, Tuesday, Sunday, Monday accumulation, manipulation, Tuesday, Wednesday acceleration, Thursday, Friday. If a PD arrays met and we were one-sided, it generally sets up TGIF, right? Or the cap of the weekly range, okay? So we still think about that every time we look at things, regardless of what news events taking place or whatever's happening, because it'll be potentially one of those weekly profiles that ICT shares. Sometimes it's very messy, so you can't really pull it out. So that's something to keep in mind. The market, let me see. The markets move by news events. So I watched the bond go down while debt remains endless. So the next move is already anticipated. Yeah. And ahead of the government shutdown. It's ironic, right? The government shutdown has to do with the debt, right? They're just interlinked. So that's another reason why I brought this up, because they're going to shut the government down. They're not going to be able to agree. They want everyone to pay for everybody's health care, have this universal health care, which is not something in America, because we are built on capitalism, right? We're built on competition, which promotes constant innovation, constant, how can I serve the customer best? That's why they've never been able to agree with it. I know that I get that question a lot when I have these kind of conversations about, like, political things that turn into like the healthcare thing in Europe, right? In Britain or something like that. They have universal healthcare in some places. But if you look at those places, they're nothing like America, you know. And the healthcare, if you ask anybody, a lot of people that live in those places that have that, you have to wait for literally hours because everyone's getting free healthcare, and you have people die in the waiting room, from what I've been able to gather. And that may be exaggerated, right? Possibly. I don't know. I don't live in those places. But I can imagine that that's the case because it's unfettered access. And when you could just, in America, get a job and you can basically have pretty decent healthcare or get some of the plans that are offered for self-employment. It's there, but we're not built on socialism. We're not built on let's give everybody everything for free. That's why America is what it is. And that's why we, have become what we've become, at least, in the positive light. And I think, it shouldn't change. And if it does, there's going to be a drastic decline in the quality of service, as it is in a lot of other cases. That's why it hasn't come about. But because one side's refusing to allow that, and the other side is now turned to more or less, let's elect communists and socialists who hate the country, on top of that, who explicitly say it, you could see where the disagreement comes in and why the shutdown, in my opinion, is going to be pretty much guaranteed every time we have a GDP conversation, right? Every time the fiscal year ends. So expect that, unfortunately. Hopefully I'm wrong, right? Hopefully everyone can, think about the people instead of their own, like everybody, instead of just one segment that's being benefited off the backs of everybody else. But I'm not going to put too much stock in that being the case. I think that chaos is going to unfold. And again, we see that the bonds have taken a nosedive. So what is that potentially telling us, right? It's potentially telling us that we may start to see, because we haven't broke up above here, we're still inside of the potential bearish tone, right? It's still potentially looking like it's heavy. It can't really muster the effort to get up here or the interest to get through to the buy side targets that we've had as a possibility. It's been holding in here. So again, we've had to wait for something like this to take place. So now going into this new week, looking at the bonds, because these pretty heavily impact what the foreign currencies do and what the indices do, and gold and silver, right? Like commodities like that go against the US dollar. We'll see, right? If it drags us lower, continues to break down, then these levels are going to continue to remain as bearish indicators, right? They're going to trade into them and then respect the upper portion from this point on. If this high gets broken, that obviously changes things. If it gets outside of this breaker, which we've had outlined and using as our validation tool for whether it's going to be long-term bullish or fail and go long-term bearish, long-term in the realm of like, a month or two, maybe more, kind of just depends. A lot can happen, right? Especially right now. Wars are looming. Chaos is erupting in a lot of ways about a lot of different things all over the world. Wars are still active. And there's just so much stuff happening, which ICT predicted 3 years ago. He said, you might as well focus and pour everything that you have into this, because if you fast forward 3 to 5 years from now, maybe even less, this was like 3 years ago when he said this, there's going to be so much going on that you won't really be able to focus if you allow your attention to be divided towards these things too much. And ironically, yet again, just like how he is in the markets, he was correct. People call them crazy. I felt like, well, I don't know, bro. It sounds a little much. But no, he's been proven correct. He's not only a wizard in the market, for whatever reason, somehow he's able to call these things that are going to happen. He called the gold move as well, the gold and silver move. He said it's going to go parabolic in the next couple years, right? This was in 2022. And what do you know? That was correct. And he probably forecasted the wars and unrest and assumed that it was probably going to get worse. He understands all the stuff about the U.S. debt clock. I said Elon Musk was the first one that pointed me to the debt clock, but ICT was the one that, when I first started learning from him, he was the one that pointed this stuff out. He talked about this a lot back in 2021. I mean, it's been a long time since he's talked about this. Even before that, when I wasn't involved with him or even knew about trading, he was talking about it apparently. And I mean, he's really smart. He understands the economy. He understands economics. He's a really intelligent person because, this is his life. So he didn't take it lightly. He wanted to understand everything. So we benefit from that. And we could see that all this stuff unfolds. So yeah, let me move this over. So again, if we continue to see this drop, right? If we go, let's start at the weekly chart. Okay. If this continues to drop, we're seeing early signs potentially that we may see a big correction in the indices. And with DXY rallying like it is, it seems like the market is aligning with events that are potentially happening in America. That being the shutdown, things like the shutdown, right? Some of the chaos that's taking place, the fear of war. It's making the dollar seem like a flight to quality, which could be debated. Gold, silver, all that stuff is indicating something to us as well. We have a cracking correlation with gold and silver as well, which is pretty interesting, right, to say the least. Let me pull that up real quick. This might be a little bit longer of a call because we have so much to get through, so just be ready. And I'll make a quick review later if that's something you guys want. But yeah, we have a reasonable cracking correlation, right? So we got DXY rallying aggressively with these other assets, right? With the bonds and yields, right? The yields rapidly repricing higher. That's giving you pretty solid indication that the dollar's probably not fully done going higher, right? And if dollar goes higher, indices go lower, bonds go lower, currencies go lower. So you could see why this process that we do every Sunday helps you get in front of things like this, right? It makes you more confident. How many people are assuming that we're going to be overwhelmingly bearish right now? There might be some, but when people are looking at this stuff with no context, you can imagine that they're not necessarily super behind or super confident behind a decline. I can forecast or see that being the case. They may look to punch it up one more time, come and take this out. That would be rational. That's what the anticipation has been. I've been wanting to see if we can get up here because we respected this wick, right? It respected this order block for a little bit. Excuse me. But then we got this pretty rapid decline, which we called out live in my private group. We got ahead of it. Pretty rapid decline the other day. And now we're seeing that, we've shifted market structure. We're below a low, high, lower low. So that's potentially a bearish breaker. Okay, we got a lot going on in there. I'll open that up a little bit later. But you take all of this and you see how the bonds are starting to open up. We got the 5 and 10 year definitely opening up to the downside. So we're going to have to continue to monitor how this is going to respect these levels. Okay, we got a low here, high that took the high, and now we've got sell side taken again. So this high extreme down to that low extreme, right? We got buy side and sell side offered. So I personally wouldn't want to see, if this is going to keep going lower, I wouldn't want to see it break through to the middle portion of this high to that low. You could see that I have this monthly wick in here outlined, which is over here. Okay, let me just visually represent that. So it's all that right there. Okay, you could see how 50% of that's being respected. And what do we do? Here, let me move this up. Sorry about that. What do we do when we see price doing this type of stuff, respecting the 50% of the wick? If this was the 5-minute chart and it was doing this, what would you be thinking? You'd obviously want to see if this can hold in here. And if it violates that, we're starting to count PD arrays now. How many PD arrays are being violated? And if it gets over 3 on this time frame, it's a pretty long-term time frame. So you can rest assured that you're probably going to have a pretty nasty move, unless it breaks, back to the upside and starts getting us back in line. But with all the things that I've just mentioned, the things that are looming ahead of us, as a well-rounded trader, as someone that understands that there's more to this stuff than just what the chart is showing you, it's very important to consider these things, right? And we could see that the chart is also telling us that, again, this looks like it's holding. If this was the 5-minute chart, I wouldn't think bullishness right now. I would need this to invert, right? Preferably see us break pretty aggressively through that, create a balanced price range with that, right? Overlap it with another displacement, come back down into it, use it as support, and then rally up. That would be the most confident idea, or if we have this order block, it displaces up, creates another order block, and then breaks through it. That's another tactic that I use outside of the 3 PD arrays or in conjunction with the 3 PD arrays to confirm that a particular move's happening. Some people may say, oh, it's a little late, but, that's their opinion. I like to be very confident in what I'm doing because I trade with real money, right? Like I'm actually a trader, and I've kind of graduated from the practice element, right? Just solely practice. I practice, obviously, that never ends. It's part of the job description. But I like to be very conservative and confident. And price needs to prove it to me what it's going to do. And if I can't prove that something's happening with the chart that I'm looking at, plus the other assets that we look at to further confirm, further drive home the fact that something's going to happen over another, I'm generally going to wait for more information. I'm going to sit on my hands. Or if I'm going to trade during that type of environment where maybe I need to wait a little bit longer term, I'll have my risk cut to 50% of my normal risk, right? Which is generally anywhere from 1% to 2.5%, right, per trade. So depending on where my head's at the moment, sometimes I cut it even lower, right? Sometimes I go, much lower, right, to like 50% of everything. Sometimes it's 0.25% of everything if I have to engage in a pretty nasty condition. But generally, even in those environments, on this channel, in my private group, we've proven, my students have proven as well, that we could still navigate those moments. It just is a little more uneasy, right? It's a little more risk that's at hand, but you just mitigate that by cutting your risk a little bit. So again, in this case, like I've been saying, it's holding this level that we've had our attention on, right? We've been talking about these levels in here. I said that this won't fully be committed to going to the buy side unless it was to get back up here. Otherwise, if it runs up and respects these levels, we're going to continue to push this lower. That may result in the other assets that are associated to this, like the currencies, GBP and Euro, and the indices. It may indicate that it's going to have a sell-off at some point. We're at the start of a new year as well. So yearly power 3 dynamics, accumulation, manipulation, distribution later, right? So we may be in that early accumulation manipulation phase, right? You see accumulation happening here. Okay. Is this going to continue to drop, right? And then maybe for the quarter that we're in, be bearish, right? To set up maybe the whole yearly range going higher if it does choose to go higher, right? Those are some considerations that you have to have when you're in this first quarter, when you're looking at price and doing all these things that we do on a regular basis. Because again, this is contextually building a narrative. It's not just higher highs, higher lows. It's a very highly advanced way of viewing things, and it's hopefully simple enough for everyone to understand because we talk about it all the time, every single week. Basically every day we're referring to these different things across all time frames, and you guys see that it's worked out all year last year. I called Sunday calls specific bias and narrative. There's maybe 2 or 3 weeks that didn't work out, right? And the ones that didn't work out, we were able to get in line with it because of our validation and our validation process, our flexibility process, right? How to read order flow, like actually read order flow, which again, it's all just been shown. So hopefully you guys have been applying all these things that you guys have been learning. I know a lot of you guys have, but anyone that's new, welcome, first of all. I know I've had some new people over the last couple of weeks, but yeah, it's a process here. It's not something that can be learned in 5 seconds. It may take, a month to really get a feel for what we really do. So, that's just what it is. If you're a real trader, you have a depth of knowledge. A lot of the stuff is very simple to understand, but some stuff's going to take time for you to trust. If it's easy to understand, there's going to still be a learning curve, a process of building that relationship to the concepts. So that's another reason why anyone that says you could learn this stuff in a week or even a year at a high level, for most students, that's not true. But for a handful of them, which I've had, and I have them in my private group, and even here on YouTube, the results come pretty quick in terms of clarity, and you do the rest when it comes to profitability. I can't guarantee that, right? But yeah, so hopefully this makes sense. Those of you that have been with me continuously, again, this is all just referring back to things that we've talked about for literally the last months, stemming from last year up into where we're at currently. Right, so let me look at the chat real quick. And again, if you guys are new and you have questions, this is a call where I answer questions. I don't just fly through stuff. It's literally made for you to ask questions. Okay, like it is what it is. And you will get stuff if you just sit there and don't ask questions. But I literally make this time available so I can answer questions, because I know not everyone could join my private group, which there's a QR code on the screen if you want to get details on that. But I'm sincerely trying to help. That's why I offer my time like this with basically unlimited amount. So yeah, so we have broken monthly lows. What's up, Chawezi? I think it's been a minute since you've joined us, huh? It's been a while. I haven't seen you in a while. Hopefully everything's been going okay. Hopefully you've been having a blessed 2026. I can't remember if you jumped on, if this is the first one you jumped on this year. But yeah, welcome, brother. Welcome back. The daily is, yeah, that's absolutely true. The daily is looking pretty crazy. So we have broken previous monthly low on all the bonds. Yeah, that is a very telltale sign, right? It's very, 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 very interesting. Well, they haven't all done it. We still have one. So we technically got an SMT there. So you can also see where this low is resting at. So we're not entirely out of the woods yet from this monthly chart, because we still got the bond, the 30-year bond market. We got a failure swing in here, and we're still closing, or we're still at a closing basis above the 50% of this wick, right? And then we're still also from this upper portion of the body of the order block to the low of the body, we're still at the 50%. So it's very sensitive. It's having a hard time getting through that. That may all change, right? We see the 5 and 10 year really opening up. So we may see that the 30-year is just lagging a little bit behind what these are doing. And with the government shutdown, I would not be trusting this SMT. I would not trust it whatsoever, because that can have a real serious problem. If you think about the last couple shutdowns, the market didn't really like that because it's uncertainty. It makes it not really too easy to determine, right? At least for the market. We generally have a good idea, right? But even some of the highest level people become uncertain when it comes to things like the shutdown, because you can't control that. You can't really control anything in the market, but this is just an added variable of something that can really mess with things. So yeah, we'll keep our eyes on that. But again, nothing's really changed overall, except the fact that it has now broken down instead of being consolidated. You know what else is something I want to point out as well? I said back in November to December to January that these are going to be the more hard times to trade. I said that there's cracks and correlations that are very common, that are very likely. There is choppiness. There is a lack of follow through. Let me know in the chat if you have seen more of that than you are generally comfortable with seeing. Comparing it from like last February to November, or to the summer months at least. Like, have you guys seen that came to fruition? Like that assumption, that forecasting ability or anticipation of the more sloppy, harder to trade conditions that should have resulted in you cutting your risk, like I've said, and lowering your frequency of engagement. Not your frequency of study or observing the chart, but it's something that manifested. Would you guys say that that's true? It's something that protect. Okay, yeah. Tony said yeah. Chawezi said yeah. So you guys can see that. Well, with that being said, can you guys see how seasonality, whether you looked at the seasonal chart or not, has manifested? Because seasonally, this is what happens on a yearly basis. These times of the year that I point out, which ICT has obviously pointed out at times, or at least pointed out the importance of seasonality at times. You know, you guys can see that it manifested whether you wanted to look at the seasonal chart or not, because you see that I've been able to say, like, this is probably going to be the condition. It's highly likely that this is probably going to be the condition. And you see that it manifested, right? You've seen so many call outs that have just went exactly how we've portrayed them to go. You know, so it's repeatable. So that kind of shows you, and it shows you that because this stuff's repeatable, there's a method to it. There's things that can be observed that can help you anticipate these things. And we talk about all of them here on the YouTube channel, being seasonality and all the different things like COT and whatnot. You know, the intermarket relationships, certain times of the year. And then, of course, we go into much greater detail into all these things when we're in the private group. We talk about it more, I should say, more frequently whenever it's needed. But yeah, okay, Fred said he agree. Yes, yeah. So that's an important thing because, again, it's based on experience. So you guys got to visually see that, which is something that's extremely important for you, and why it takes like at least a year or two, sometimes more, to really feel like you understand what's going on with the anticipation aspect of things, like seasonally, you know, let alone the models that you trade. You can understand how bias and narrative can be benefited from um, or reinforced with this type of understanding. Sorry about that. I didn't want to cough in your guys' ear. I don't know if I'm getting sick. I say this all the time. It seems that I just don't get sick. Now that I'm saying that, I bet you I'll get sick. Watch. Hopefully not. I hate being sick. Um, but yeah, so you guys seeing that is much more valuable than, you know, a lot of students realize, because this is part of experience. These are things that students early on can't see in the future. Like, they can't see themselves doing this in the future, and how this does become a reality where you can see that the market is fully 100% controlled and it's anticipatable because there's a logic. Seasonally, there's characteristics that happen repetitively. There's certain times of the year that lead to certain types of conditions. That falls right into your ability to navigate price. It falls into your ability to understand conditional awareness, when you should or shouldn't push, when you should drop your risk versus when you could keep it normal. Okay, at least consider these things. This really helps you do that. You know, it helps you be confident, and it helps you. It helps provide evidence that not every moment in price, not every single month, not every quarter is going to be something that you want to push aggressively in. Obviously, you know, when you understand intraday volatility and you get better at that, you can do whatever you would like as long as you manage risk properly. You know, you can, you know, risk normally in harder to trade environments if you choose to do so. But as a trader learning that's just getting the hang of this reality and all the other things, you want to make sure that this is understood, right? This is considered, because if you look back with this knowledge, you look back and, you know, on your past progress, your past experiences, you'll quickly see that a lot of times the hardest to trade environments are in the exact moments that we've talked about: November, December, January, and then what is it? June, July, August, right? September could sometimes be a mess, but those 6 months are times that you have to watch what you're doing. You got to watch out, right? And then of course we got the start of the quarters. The start of the year kind of falls in with the January thing, right? But these are all things that you see over time, and you cut your risk. It's very important. It's very important because I guarantee if you look back at the times when you had the hardest time and you got hurt the most, you pushed too hard in things like this, in times like I describe, you know, and you weren't there yet. You weren't at the point in your career yet where you can push in those moments and be successful, or you can push, and if you take a loss, you're not going to really worry about it, and it's already anticipated, so it doesn't really hurt you mentally. You can imagine a new trader doesn't have this understanding, this awareness, because also no one's really talking about it except ICT, and a handful of other traders that are really good. But even some of the really good traders, they don't point out things, or they're kind of disconnected from where they used to be at. At least I noticed this with some of the people that I have followed for years. It seems like when they arrive, it's hard for them to reconnect with the trader that was struggling. And, I have, done my best to make sure that the way that I teach, the way that I talk about things, I keep that previous me, that young trader that's trying to succeed, that new trader, young or old, that's trying to succeed, that just hasn't got the understanding yet, and how it felt when I was being beat down. And it doesn't justify the beat down. If you overtrade and over leverage, you could just say, "Oh, it was the condition." That's not at all what I'm trying to have this get used as. It's just a moment or pieces of the year. It's moments and pieces of time in the year where cutting your risk is highly advised, because it could do things outside of what you're learning here, with a lot of manual intervention, or it could be something like this where it's just stuck, causing problems in the other assets, and there's just no follow through. You're stuck in the mud, and you don't want to be pushing too aggressively in those moments. And they are anticipatable, which is kind of the whole point, what I'm trying to get across to you guys, So you guys have had a good opportunity to witness this in real time over the year. Those of you that have been with me for a while, and those of you that may be new, that end up watching this video and hear me say this, that could be you going into next year, if you stick around the whole year, and then it'll just continue, right? Well, with all the new traders, because this won't get stopped talking about, or I won't stop talking about this over time, because it's always something that I use, seasonality and all this stuff. And it's just how the market operates. It's one of those truisms that sometimes is debated, but I mean, the results and overall data kind of speaks for itself for anyone that's trying to fight against COT and seasonality. They just got to use it the right way, which is how we teach that here, right? Which is what we teach when it comes to fundamentals and whatnot. But yeah, let me see the chat. Just looking at the quarterly chart, I see that quarterly candles are getting shorter and shorter in range, with small bodies and big wicks. On the 30-year, the last candle with a large body, then the wick was January 2025. So Fritz, based on the statement you said right there, just looking at the quarterly chart, I see that quarter candles are getting smaller. What do we say about small ranges and large ranges when we're thinking about day-to-day price delivery, right? What have we talked about? What's the importance of smaller and bigger candles, right? Or smaller and bigger ranges? Okay, they follow in a cycle. Okay. What else? What have I specifically said about small ranges and large ranges? Turn 51. Oh, nice, Tony. Nice, Tony. You hit halftime, brother. You still got a long way to go, so it is what it is. Yeah, exactly, Chowezi. Small ranges lead to large ranges. Large ranges lead to small ranges. So we've had a lot of small ranges just on this time frame too, right? And if we were to go to the quarterly chart, we could see that there's a lot of small ranges. We're due for a big range from this quarterly perspective. We're due for a big range quarter, right? Small ranges lead to large ranges. So we may see things light up, right? There may be some really big things that happen this year. Whether it's positive or negative, obviously no one knows, except the people that kind of control everything, right? But it is what it is. We do just fine with what we have. So the small ranges leading to large ranges is something that I could be anticipating. Maybe it's this quarter that gives us the large range. If it's not this quarter, it potentially could be the next quarter that gives us a large range. And then we have our target here and down here, right? So we got the wick here. We got this one, actually. We could use that as quadrants. And then each of the quadrants can be a target if it does give us a range lower or shows interest to go lower. It seems like a lot of failure to get higher has happened from this quarterly perspective. We do have pretty solid lows down there. If it did want to target, we got equal lows. Right, if we go like this, it's a pretty nice target to keep on your chart. So yeah, I would keep that there, you guys. And again, for those that may be new, why are we spending time on this and not on the NASDAQ and ES and all the other things? Because this is what builds our initial narrative. Okay. See, I would keep that on your chart, you guys. I would really, really keep that on your chart. Because again, if it just starts to break down, especially if it gets below this candle here, that could be very interesting, right? We may get a pretty sharp movement. It may take 2 quarters, right? I mean, it does some large ranges here and there, but we've had a lot of small ranges, so we're due for a big range at some point. And we'll see if this quarter is going to be the thing that presents it, the quarter that presents it. But if not, we got 3 quarters ahead of us. We got a lot of stuff that can happen this year and a lot of things looming. So if something negative happens and the bonds drop for whatever reason and the yields start to rally, again, that can be very early indications that something may start to rip to the downside in the indices and the foreign currencies. Okay, so again, you want to keep tabs on the closest liquidity. Here, let me actually pull this out. Do I want to do one? I don't think I want to do one. I'm not in the mood to change the color. So we got the 50% of that quarterly wick. I think I will actually mark that. Anything that you have that's on one large time frame or the other, you want to make sure you're changing the colors and you're also changing the sizing. It's really helpful. Like if they're super obnoxiously large, right? It's going to be a good helper, I guess. It can kind of help you decipher when you're on those lower time frames, and you'll keep tabs on it. Or you can write down this price level, or you could do that too. Put it on a piece of paper. Every week, you can just review your higher time frame levels that are important to you, and then it changes every week. That's what ICT does, because he likes things looking like this, that's nice. My chart that I execute on looks like this, right? It looks like a really bare. But of course, I put an overwhelming amount sometimes of annotations because I want to make sure that you guys' eyes are being trained just in case you're not going and doing the things that I ask you to do or that ICT asks you to do, right? When it comes to back testing, which, hopefully that's not none of you guys on the call right now, because this stuff is very important. Okay, so we're going to keep that on our chart. Again, we got this monthly 50% of the bullish order block. So we'll see if that holds. Because of the declines that we're seeing, it may not, right? We may start to see this be the early signal that things are going to change and go lower. We already have one change in state here. We also have the order block here, and then we also have the low, this monthly inversion fair value gap. Well, it'll become a reclaimed fair value gap if it gets below that. So we'll see if that can hold. Looks like the order block here is holding for now with this candle. Okay, so If we drop lower and we get down below this monthly inversion here, which will be a reclaimed instead of an inversion, it acted as an inversion for a long time. Since last March, it's acted as an inversion, but it's now failed. So this would be very significant if it gets down below that, because we have an order block. We have a order block here too, supporting the move. We have 50% of this wick that clearly seems to have been respected. We also have the fair value gap here that's being respected. Look at the bodies. Perfect. Okay. And again, if it gets below this, that'll be numerous PD arrays from all the time frames being violated. Because this drop here clearly shows that if we move to the daily chart, because this is a monthly, multiple PD arrays have been violated. Okay, so we got early signs, not only from those lower time frames, but also from what we see here on this time frame, right? We've got an order block, so we'll see what happens. Now, if this order block was to be traded through at least 50%, if it closes above that, then of course we get back to our buy side targets, but that has not taken place, right? And it looks like it may be changing. So this is going to be very important information going into the other assets, okay? And again, the level I mentioned for my potential invalidation for this to go lower is going to still be the highs up here, or the high of the breaker. We also have the monthly bullish order block here that we're trading into, like I said. And then we have this fair value gap. So similarly to this one over here, we still want to look at this as well, right? So if it breaks through that, we then have another new order block. We have a pretty solid response from this bearish breaker here. And we're going to need price to really commit, like do something like this if it's going to be trusted to go higher again. And that, of course, supports buy side in the indices if it was to do that. But if it doesn't do that, we're getting an early sign from the bonds and the yields, with the yields going higher and the bonds going lower, while the indices have not fully committed yet to the downside. We're getting an early sign across these other assets that may be in the near future as we head into the government shutdown that's most likely going to take place. I'm not sure if it's this week. I think it is this week because they're going to have the conversations with that. I'm not too sure. I'm going to have to double check that. But yeah, we'll see. They may have till the 31st. This may be the last day, right? So yeah, we'll see. Hopefully we don't got to be in a shutdown again. But that would be a reason, on top of what I just mentioned, analysis-wise, for us to possibly see price decline. Yeah, Chowezi, basically every fiscal year, there's a government shutdown because no one can agree. And everybody wants to keep paying for shit that we can't pay for because we're, 38 trillion in debt, so they refuse to cut. So because one side's refusing to cut anything really, they would prefer nothing gets cut. The other side, the current administration, they're not going to stand for that. So they're going to either have to bend the knee, give them what they want, and keep overspending and not being responsible with our money, or we're going to have to shut the government down, which I think that's what they're going to choose to do because, nothing comes out of these shutdowns except, the last one at least, the people that were fighting against the proposed budget, which had a lot of cuts in it, the people that were fighting against that, they didn't really get anything. They had to take their ball and go home because it was getting a little reckless, so it's going to happen again. Yeah, Choezi, we just started the year and we're already going to be in for some chaos. If you think about it, though, Power 3 is still in play, right? We still got to think of Power 3 on the yearly chart. So if it goes back to the buy side later on in the year, which I assume is going to happen because we got a lot of good things in the economy right now, unless we go to war with, everybody, right? I think we should be able to still finish off potentially positive as long as companies do well. We also have all these companies, AI companies, that are obviously holding like aggressively with the stock market, right? They're pushing interest, and their earnings have been pretty spectacular. But these same companies that have been basically the heaviest impact on the market, they're doing a lot of investing in data centers and all this stuff. So we got to see what the earnings look like in the next 1 to 2 earnings. We got to see, is their bottom line being damaged? Because it's going to be hit, right? They're borrowing money to do this against the companies. So we'll see what the impact of that's going to be. That may also amplify the possibility of things declining in the indices because we're so overvalued right now. The greed is at all-time high. It's more than it's ever been, at least in the recent past. So we'll see what it wants to do, right? And again, if this was to continue, right? Remember what I said the other week about how if this was to continue and we were to drop lower, and it does look like it wants to target the low down here, we have a market maker sell model possibly. Okay, so we may be seeing the smart money reversal. We may see the low risk sell, which is what that really looks like to me. We may see the first stage distribution here, kind of just accumulated inside of this imbalance. And then if it breaks that, we may get to these price levels. And if it gets down there, depending on how aggressive it gets down there and what's happening in the world, what's happening in the world plus what's happening in the economy, we may be able to see this continue to decline potentially. But again, if this was to fail, that sell model idea, that's important insight. Because then we could look at the failure of that market maker sell model. If it was to, say, get up to something like this, we could then look to see a market maker buy model and then continue to push it higher. That would end up being positive for the indices, unless it has a cracking correlation that continues, which is, it could be a possibility with all the things taking place. But as we get into the February month, all the way up to the summer months, right? Basically the third quarter, we should be able to see some pretty nice price delivery. Lots of volatility, especially with all the stuff happening in the world. So it should be a good thing. We'll see though. But for now, again, my overall opinion for the bonds is going to be, let's see if we can hold this. If we get down below this, that'll be a nice change in state of delivery. We already had one change in state. We had a second change in state here. And then we also got a shift in market structure, potentially with another change in state. So that makes it even more powerful when we have a change in state, a market structure shift, and then another change in state, right, with basically another order block being taken. That is a very powerful confirmation that price is not, in fact, going to turn around and keep going in the buy side direction for this example, and it'll be basically confirming we're going lower, which I think we're working on right now. As long as this holds up, that'll again send reverberations through the currencies and the indices. Okay, and then like I mentioned earlier, we have this quarterly wick in here, so we got 25%. Maybe we can actually throw that up real quick because it's close. Like 25%. Then we got this wick in here too, all those quadrants. So yeah, that's my opinion on the bonds. Hopefully everything has been insightful to you guys so far. If you have been getting value from the content I provide today or in the past and it has helped you, definitely don't forget to like the video, subscribe to the channel, maybe tell a friend. I like the word of mouth. I like everybody knowing each other. It's definitely nice. Just keeps it like a family unit, essentially. So I have my private group, and I appreciate it in that regard. So yeah, if you guys could do that, that'd be wonderful. Much appreciated. Before I move on, let me check the chat. Would you say on the weekly chart we have made smart? Yeah. Oh yeah. Yeah, we definitely, like I just mentioned, yeah, for sure. You asked it before I mentioned it. Fritz. Yeah, we've been talking about this for a while too. So I'm glad you kind of remembered. This year's going to be interesting, Tony. Yeah, the last shutdown was. It is what it is. For people that are on the government or need the government's help, like if we go back in time and I was still homeless, trying to get benefits and whatnot, it's or like a single mom that maybe just down on her luck or whatever, or just anyone that's kind of struggling right now. that's using the government for help, they're unfortunately going to have to be frustrated with it, because good people get hurt when bad people do bad things, painting it as good, and they do it for decades, giving, like, overextending. It's going to be very painful to fix this 38 trillion in debt, and that's just the reality. I wish that they would be pumping out videos about that, but I don't think that would sit well with people. But then again, I mean, it's a very hard situation. So yeah, hopefully, Chabwezi, you weren't too affected by the shutdown. Let me see, that quarterly wick level seems it's like a nice target looking at the weekly chart. Yeah. The quarterly wick, all these quadrants are nice. First and foremost, though, before we get down to any of these deeper levels, that may be the initial draw overall, but we still have this wick here too that needs to be targeted. So we got the quadrants in that too. So that could end up being something that could be looked at. If we take this high to this low, I mean, the extension level down here, I mean, it's looking like it could potentially get us all the way to here. How realistic is that? We're going to have to just wait and see what happens with the economy and things that are done. But, I would keep this, keep that in mind, you guys. Let's see. So weekly. Okay. So yeah, that's essentially all I have for this. We could see that the quarterly wick level, the 75%, it's pretty close to that extension, that first extension. So again, we'll see what happens. So it's really far from now, so it may not happen for a while. Kind of just depends. We could get something like this, of course, or something like this. Right? Was that when a shutdown was happening? I can't even remember. April 2025. Oh, I think that was tariff conversations. I think that's what was happening when they were first really pushed. But even in all of this, we talked about this being a breaker. We watched that. We stuck the price going lower for this asset. If you go back and rewind to some of those times when I was talking live on this, you'll see very quickly that we were in line with whatever it chose to do. And very good lessons in those videos. I know they're kind of old, maybe not impactful for what's going to happen next, but if you're trying to learn, all these live calls have ridiculous amounts of value. And I got pre-made videos too. I'm gonna make a lot more of those this year. But the evidence is there, right? See the quarterly wick. That lower level seems scary if talks of dumping bonds are around. Yeah, that's something that could get it to go down there, and the pain that will be inflicted on people in America if Europe chooses to do that. I think that's an act of war, if we're being honest. If we're allies and that's what's happening, if they're mad about tariffs, which they put 10 times more tariffs on us than we ever have, we're just kind of making up for lost time because we have weak leaders. If that's what they were choosing to do, I don't think Trump's going to like that, and neither will the American people. And if they explain it correctly, they'll know what the cause is, but we'll see. Not something we could worry too much about. Just be prepared for craziness this year. It's going to be more crazy than last year because there's even more things taking place. And Trump likes to drag his nuts on people, which is, which is good and bad, right? It's good and bad. So, we'll see. Hopefully he chooses wisely when he does that. Hopefully it's not needed. Hopefully everyone could work together. That would be a large range. Yeah, that'd be a huge market maker sell model. And of course, we'll be able to navigate whatever price throws at us. It doesn't matter. We've done it for years at this point, and it's not going to change the way that it operates. It's just going to have more rapid manual intervention that takes place, the more stuff that's happening. So it's more risk. Does that mean the concepts stop working? Absolutely not. We're still going to be doing the same stuff every single week, every day, and picking our shots when we're supposed to. Okay. So yeah, this is my opinion on the yields or the bonds. I think we spent enough time on that. So again, if the bonds are going to do that, we may see this do the opposite. It should do the opposite. If these two assets are reverse correlated as they are, and we see that the dollar looks strikingly similar to what this delivery looks like, huh? Strikingly similar. If I do say so myself, you see the correlation, how it's beautiful. I think that's a little bit longer. What? Oh, okay. Let me go back. December. Wait, let me see. Oh, maybe I was zoomed in a lot. I don't know why it looks October 2025. Yeah, it looks strikingly similar. So that kind of shows you how correlated this stuff is, how it can be helpful in gauging what the DXY is going to do, and then also further anticipating what the other assets are going to do, because all the assets are meshed together, I guess you could say. They all are connected together. I think that's a better way to put it. So if one does one thing, it's going to impact the other in a certain type of way. And if you're looking to buy or looking to sell, and you can couple all this stuff together as a layered analysis, you could start to see how you can be very confident over time when certain things are taking place, or if they're not taking place, it tells you something too, right? Crack and correlation tells you what kind of condition you're in. So yeah, so again, we got the yields rallying here. We got the 5 and the 10-year doing what the bonds and yields were doing, just the opposite, or what the bonds were doing, but just the opposite. The bonds were declining, which again have an impact on indices and foreign currencies, and we could see that the yields are rallying, right? The 5 and 10-year yields, they're rallying up. We have a pretty logical target up here, so we'll see what the reaction is going to be from this. Okay, we now have that inversion fair value gap fully committed to. So unless it was to take out this low, my assumption is the price is going to probably look to take out these highs up here. You see really obvious equal highs there. We see a high here. We have trend line liquidity that's pretty available. So we're just going to have to wait and see. But for now, this is making me lean towards more of an assumption that, okay, DXY is in fact going to be pushing pretty aggressively to the buy side still. There's nothing telling us that things like this order block or this breaker or this inversion or any of these levels is going to be untrustworthy. Nothing, at least between the bonds and yields versus the DXY, nothing is telling us that that's untrustworthy. Okay. So it just seems like it's going to continue, right? And as long as that continues, that'll be our opinion. We were talking about this fair value gap in here. I mentioned on the previous week that if we take out this low here and invert that, that could be enough for us to target the sell side liquidity, right? And turn this around from potentially looking to invert and go bullish to looking at price going to the downside, right? Holding this, if it was to get below that. We're not doing that. It's taking the stops. It's respecting this monthly bullish order block perfectly. And I don't think that we'll come back even to this. This is also a quarterly bullish order block. You see the sensitivity from that level? How important quarterly levels can be when we get to them, right? If we're trading to them, it may take more time than you would expect. But when we're already inside of them, you want to make sure that when you're on this quarterly chart and you're moving to those lower time frames, you got to make sure you're referring to this, right, to these levels on every asset you trade, because it's just a high level of understanding of whether a level should hold or not, versus being on the 5-minute, asking yourself, is this 5-minute fair value gap going to hold? A lot of times it's not, because especially if you're not looking at the higher time frames, you don't have deep enough context to really gauge price going in one direction or another for a decent amount of time. We don't want to be correct on bias and narrative for one day, for a session. I personally have an opinion that I want to be correct for a couple days, for a week, maybe even a quarter, which we have done. I've proved it publicly last year with us being consistently accurate with where price is going on a more longer term basis, as well as a lower time frame, shorter term intraday basis. Okay, and again, you could see that this is just a very layered skill set that is showcased here, and you get a true understanding of what markets are doing for a longer period of time. So you don't have to flip flop. Like if you get a losing trade yesterday, but we're still higher time frame bullish, are you going to go in and try to force shorts again? Right? Are you just going to assume that the higher time frame isn't important because a 5-minute chart says it looks like it's bearish when we're inside of something like this? Are you really going to do that by basically disregarding the higher time frame? I wouldn't, because then it'll result in what many people deal with, lack of consistency and bias and narrative. And here we provide clarity, right? I prove that we can do it. So part of that has to do with this type of respect to the higher time frame. Okay, so again, I'm going to have the same opinion in here. If this fair value gap gets left available, which I think it will, because we have a high, low, a higher high. So we've got sell side, buy side delivered, right? We do have some gaps in there that are a bit inefficient, but we see that there's some trading that's gone on. Maybe it wants to get down there. I don't necessarily believe it will, given how price is treated this level. I think we're going to stay within this, or at a maximum, run down maybe below this one more time and then send it. Just accumulate more sell-side liquidity inside of the monthly bullish order block. And again, if this keeps going higher, that's bearish for the indices, bearish for the foreign currencies, bullish for the DXY. And that's also hopefully followed by this this doing the opposite, right? So yeah. DXY, if this goes higher, that'd be bullish for the DXY, bearish for those other assets. And then this does the opposite, right? So if you can confirm that relationship together, I'm not sure if I mixed up what I just said, but if I did, correct me in the chat if I did make a mistake in there when I was explaining it. But just for good measure, because I'm not sure if I mix it up. But again, if this was to go lower, this will drag the DXY lower and everything else should go higher. And then this should do the opposite, right? It should go higher in that case. And then vice versa, right? If this goes lower, and this goes higher, that's bullish for the DXY, bearish for the others. Okay, good. Yeah, I don't know. I just, I was like running it back in my head and I couldn't remember if I, maybe I made a mistake, but no, I didn't. You are showing life-changing charts. Yeah, Tony, it's funny because you started with me a year ago and this was all new to you, like understanding this, the context, right? And how this stuff is important and why we spend so much time on it. Like we've spent an hour and a half so far just here, obviously talking about other stuff too, but this stuff is just extremely, extremely helpful. It's very, very liberating because now that we have that information and we move over here to the DXY, we can justify how this order block should hold. This down wick should hold. This up movement here should hold. This market maker buy model potentially should hold. Why? Because we have back-end information telling us under the hood from assets that are some of the most important assets for the DXY and other assets, that being the interest rate markets for the U.S. economy. It just drives home the fact that this should be trustworthy in this case. I am seeing so much as we go, Fritz said. That's good. I'm glad that you've learned a lot. You've also been with me for a while too, so I'm glad you feel that way. All right, so sorry about that. But yeah, Tony said, I told you I'm glad I met you. Knows this is my manifestation. Yeah, I'm glad we met too, brother. I appreciate you putting your trust in me. And all of you guys that give me your time regularly. And, those of you that are in the private group, and just everyone that supports me on this channel in any capacity, even on Instagram, if that's, all you've you've really followed me on, and you found your way here. All the support means a lot. And literally, I'm here to just help. There has to be a filtration process, obviously, for like working one-on-one, because people just don't respect what's being taught. The internet's the Wild West. So, I mean, there's no choice. And if it's too low, it's going to still let people in that are, still of that group. And if it's too high, it kind of excludes people. So it's kind of right where I wanted it to be. And of course, I've had help with my private group from my private group, right? Like they've helped me do all the pricing and all these different things. So over the years, it's become what it is because of people just like you guys here on the YouTube channel who ended up joining the private group. And let me see. And of course, any of you guys that ask questions here on the YouTube channel, you're no less important than they are, right? So any questions you have, these are the days that I answer whatever questions and whatnot, and I always try to help you guys. But I do have obligations for the students that do invest in me for one-on-one help. So there's all of you guys are special, right? I appreciate all of you. Let me see. So how strong a bullish narrative is the weekly wick, and looking at daily, the BPR of the last 3 days, 30-year yield. You talking about this one here? Oh, or are you talking about this one right here? Oh, you said the last 3 days. Past week. Are you talking about this one here? Is that the wick you're talking about? Sorry, I know there's like a 10-second lag, so I'll give it a second. If it's not that wick, bullish narrative looking at the daily BPR of the last 3 days. BPR using the wick? Last Wednesday, Thursday, Friday. So this Wednesday, Thursday, Friday, right? Wednesday, Thursday, Friday. Are you talking about this overlap of the fair value gap? That's significant for the bullish narrative. That's very significant, right? That's another reason why this low, right? Even if we just stayed down here, I mean, this is showing an unwillingness to go down there. And of course, when we drop down to the daily chart, we see now that there's also a confirming factor here, right? It's now overlapped. So we got sell side also with a stop run, buy side being traded to now, overlap this fair value gap, and it's creating an order block. Students in my private group, something probably stands out to you guys about this specific area. But yeah, this here is definitely a BPR in there. I totally agree. And it's at a monthly bullish order block too, so that's even more important. So we're starting to see higher time frame PD array respect. Basically, contextually, the retracement to go higher is still in play. The response off of this, notice how it didn't spend a lot of time there. It's already spent a lot of time at that monthly order block. But now we got this. As we go lower, we're starting to see each time frame as we move up or as we move lower, everything's starting to fall in line with each other and look the same about the narrative, right? So unless this was to be traded back through, right, and it would basically show no more respect to this and basically invert this, we'll still continue to go higher. Again, if it was to break down through some of these levels in here, we get an early sign that bearishness may unfold if this gets taken, because we've already taken liquidity. We're at a level that needs to hold if we were thinking bullish narrative, right? Because once it starts breaking down, it's like, are we really going to force the buys, But in this case, it doesn't look like we have to force anything. We should never force anything, and to begin with, obviously. But yeah, this is definitely something that looks really nice. If this was the NASDAQ or any other asset and it showed the same thing, I'd be thinking the same, right? Because it's all universal. And then, of course, once we get outside of this fair value gap here, or if we get up above this high to the low extreme here becomes a balanced price range in itself. Okay, we got all types of buy side and sell side offered. We'd have an overlapped fair value gap here on the weekly perspective, inverted, and then we have all that back and forth in here as well. So that's really, really balanced, right? So there's no need. If it was to continue to go higher, there's no real need for it to try to come down and maybe take this, right? There's no need for it, right? We have equal highs. We have trend line liquidity up there. So again, this looks like a market maker buy model in itself, right? The drop in here targeting the buy side, that's aside from the trend line liquidity that may be the real narrative. It may look to try to even get all the way up to here. That'd be really crazy bullish for the DXY, pretty heavy bearishness for the indices to see this just accelerate parabolically to the buy side. Yeah, it may happen. We'll see what happens. But if they keep cutting rates, then obviously things are going to continue to drop at some point. But we'll see on the next rate cut. We'll talk about that when it gets to it, when it gets time to talk about it. But yeah, so again, my opinion for this is going to be, let's see if we can hold this sell side delivery or sell side stop run, monthly bullish order block. And then we'll see if it can get beyond this fair value gap. We already got a potential change in state of delivery after a stop run. We got an inverted fair value gap in there. So let's see how that holds price. I'm assuming that that's going to hold price. And if it does hold price, we're going to see price accelerate to the buy side for the DXY, possibly continue to support a potential downturn in the indices and the foreign currencies, which falls right into place for the yearly power 3 if we're going to end up being bullish for the rest of the year. Okay, so that's characteristic of the first quarter. So that's another reason why this looks pretty reasonable. Very, very deep depth of understanding and price navigation here that's on full display for you guys. So hopefully you guys are taking notes if you haven't heard some of this stuff before, because it's not every day that we get to talk about the first month or first quarter when we go beyond the first quarter. Same with every quarter, right? We can't necessarily talk about much importance in great detail, real time, live like this for like the second and third, fourth quarter when we're done with it already. You can look at it in hindsight. We're real time right now. So we're going to see if this unfolds as it did last year. I narrated the same type of thing last year. We're just doing it again this year. And I've done it for years prior to this. But you guys get to have this opportunity to anticipate, and that feels really good to be able to anticipate something, especially if you've never done it before. And then you see just how impactful it is. You see it run hundreds of handles towards a specific level when we have a narrative painted, all the different components and pieces put together that eventually unfold. It feels really good. And then when you feel that you understand it, when that stuff unfolds, it's unrivaled experience. That's why being able to be with someone like this on YouTube or with me in the private group or one-on-one, and then seeing this type of stuff unfold while it's being narrated real time, minute by minute, day by day, month by month, week by week, quarter to quarter, and now year to year. I mean, it's something that, it's unrivaled, especially at the level that we do it and prove that we do it. I've seen you guys doing it too, right? You guys are doing a lot of stuff, really taking note and applying this stuff, proving to yourself that what we talk about here and what ICT talks about is effective. So any noise that you see on social media gets totally shut down, So yeah, let's keep that rocking and rolling, okay, you guys? But yeah, so that's my opinion here on this asset. Bonds are going lower potentially if everything stays intact the way it is. The yields are going higher if this all stays intact, especially if we get outside of this. My attention is going to be literally up there. Then we can also map this out too as a PD array of interest. We could see that we tapped into this volume imbalance here. It kind of gave that rejection. So there's unfinished business above this high. Okay. Then we got a liquidity void in here. Something interesting I want to point out to you. point this out to you real quick. Just before we move on. So you guys see this little gap in here, right? The little gap in there is a liquidity void. That's a real liquidity void. Void of liquidity. No trading whatsoever happened at that time, buys or sells. So price did offer shorts, and then now we've tried to get up there once more. So this is going to be a magnet, in my opinion. I think that's going to suck price in like a black hole and really get it up there. And that goes hand in hand with the narrative that we've painted so far. So I don't know. Let's see. Take my word for it, or don't take my word for it. Let's just see and observe this the next couple of days, or next, maybe a couple of weeks, depending on how long it takes to get up there. And let's see if it can be targeted. I think it will be. And hopefully it makes sense why it would be, based on what I just said. Because that's a real liquidity void, right? Liquidity void has a word in the name, right? Basically describing what it is. There's no trading that happened. It's a void. What's a void? Something that is absent of everything, right? It has just nothing, right? Like if, like tragedies, right? It leaves a void in your heart, right? It's like a hole. It's like not there anymore, or never was there. In this case, it never was. So it's going to have to offer that if price is efficient. It's looking for liquidity and inefficiency. That's all the algorithm's doing. It's looking for liquidity and inefficiency, or it consolidates, right? So in this case, it's inefficient price delivery. We have a lot of pretty solid delivery in here. We can make an argument about this being inefficient, some of the other stuff, but we'll see what happens. For now, though, with what price is showing us, this looks like it wants to go higher. And we have this also to verify. If this was to be given up, basically broken down through, obviously we'd have to look at that as a potential reason to try to seek some of these lower levels. And then we would have to continue to monitor this too, but we'll look at that when it comes. Right? That's a contingency plan. If it does fail and breaks down, that'll be used as an inversion. And then we'll look to try to see if it wants to go a little bit deeper into this low to that high. But for now, it seems like, if we could use this most recent low here that was aggressive to the high up there, you could see we're at optimal trade entry already. So in the context of that type of analysis, or that model for optimal trade entry, we're actually engaged in a particular move already. It's already starting a move relative to optimal trade entry. And we're inside of a market maker buy model. Okay. So it should be able to be rapid up here because we're in the latter portions of the market maker buy model, potentially, assuming that it continues. So it should be pretty quick. It should be a second stage distribution. So again, this is further detailed reinforcement of what price is potentially doing. And of course, if anything has to change, just because something's on the chart doesn't mean that it won't be allowed to be removed, essentially. And if it has to be removed, something has to be removed, something fails, we'll be right here to make those adjustments as we always do when the time comes. But generally, what we talk about works out because we know what the market's trying to do, generally. So yeah. So that's my opinion on that. So if we move to the DXY, like I've been talking about earlier too, with the bonds going lower, potentially the yields going higher, this is supporting this going higher. I kind of already mentioned what my assumption is on this a little while ago, right? I mean, I don't think that if the yields are going to keep being so rapid to the buy side and the bonds are going to drop, I don't believe that we're going to see DXY slow down. I think it's going to target these equal highs up here. And I have had this marked out for quite some time as well. Last week, I definitely had it marked up also as a market maker buy model. If it was to hold through these levels, we're now holding through that level. So we got our consolidation, right? We got the accumulation, somewhat reaccumulation essentially, or to the downside. ICT will classify that as distribution, but I just say it's accumulation on the left side, distribution on the right side. But we do have this little sideways movement that declined. Drag that over, we could see that it's acting as a reverse balanced price range, right? Or an inverted level, right? Because what happens on the left side should happen on the right side, just in the opposite direction. Because it's slapping through this was used as a BPR to the downside previously. That's the importance of the left side of the curve, little components, and the buy side of the curve, different components, right? What happens on the left side should happen on the right side, just the opposite. So we saw that take place here. So again, once it rallies up again, we have another area of accumulation in here, right? So we'll see if it can hold in that area as well, and then just rapidly look to blow these out, assuming that this is going to be a market maker buy model, similar to how this is potentially going to finish off a market maker buy model. Can you see how like meshed this is, how impactful the yields are in the bonds for the assets that they impact? I mean, it's just a beautiful thing, right? You could see that it builds confidence pretty rapidly, and clarity as far as why should this hold, right? Let me see the chat. I definitely can see it. Fred said, fitting in so nicely. Exactly. You know, it's just so nice to see this stuff fit like this, and it makes sense, right? And then when it's kind of cracked in correlation, you could see, okay, well, it's a little bit, a little wonky, so I got to cut my risk. Doesn't mean I can't trade the asset I'm trading. I just got to make sure that, I cut my risk because we don't have our full overall context in line with each other. Doesn't mean that moves won't happen. We still could look at price if it's cracked in correlation, drop our risk, and then just go off of what the asset we trade is doing. Maybe find some other assets that are correlated or reverse correlated to it. We just have to lower our risk when things are not in sync. Doesn't mean you can't trade. Doesn't mean be fearful and anxious and think you can't do anything unless everything perfectly aligns, like all the stars align. You can still do it when a couple stars are missing. It just lowers the star count, right? So instead of 5 stars, it's like 3 or 4 stars. And anything below 3 stars in your mind, I mean, you're going to really trade a 2-star move just because you have to take a trade? I mean, it's up to you. I don't recommend it. But yeah, that's my opinion though, right? Let me see. Chiwezi said, we are at equilibrium from the range low to the equal highs. Yeah, it's a good observation. This high to that low. Funny you mentioned that. So with this being the case, us trying to anticipate this as a market maker buy model, you can do what ICT calls grading a price swing. I've mentioned this before, but you basically will take your measurements, right, that you would normally use just for equilibrium and whatnot to map a range. You take it from the low. This works especially good when you're trading a market maker buy or sell model, because it shows you where, price will potentially have setups forming, right? The low risk buy, that's what this will be if it is a market maker buy model. First stage distribution. And then 75% generally is where the second stage distribution plays out or forms in a graded price swing that you've mapped out as a market maker buy or sell model. That's a little gem right there. For those of you that may have missed when I've said that before, that is a powerful, powerful gem. And again, if it fails this, you can see, like if it breaks this, there's really not much reason anymore for us to continue to push this to the buy side, right? And if this is bullish, we don't want to see it drop aggressively and take this stuff out. We've already reacted to this. If we're targeting the highs up here, if this was the 5-minute chart and we saw price just melt down below this, we're not going to be overwhelmingly thinking bullishness. Like, oh, I'm going to buy. I'm going to be switching my opinion down to maybe these equal lows. So it's no different when we're looking at the daily chart. It just takes longer and, everything's basically doing the same stuff. It's just relative to this time frame. It may take a little longer, right? But again, in a market maker buy model, once you discover the sell side of the curve, take it from the low to the high and get your graded price swing, right? And then 25, 50, 75%, pay very close attention to those levels as it unfolds. And go back test this too. Don't just take what I'm saying and forward test it. Go in and back test this if you trade market maker buy models, which hopefully a lot of you guys are, at least looking into them. It'll show you that moves just like this, right? You could see it visually taking place. A move happened at the 50%. A move happened at the 25%. So what do you think is going to happen at the 75%? I think that we'll see something deliver us to the buy side. It's not going to be a deep retracement. When we get beyond the 50% of a market maker buy model, right, and you map it out like this, you get the 50%. Once it gets beyond the 50%, it's a much lower probability that it's not going to deliver to whatever PD array or liquidity pool you're looking at, especially if you got back end things supporting, like the yields and the bonds supporting that this is going to go higher. Because we have that on the back end, we have these levels still holding, we have the 50% of a potential market maker buy model being supported. We see that wicks are being respected also, order flows supporting order blocks, breakers, stop runs below lows are turning into rallies. All of that is allowing us to know that it's a pretty confident move higher. What's above us? A fair value gap up here. We have highs up here, wicks. We have the highs up here, which is my main objective, my main view, because those are very, very obvious. It did peak above it a little bit, but that's a very small move. There's still stops up there. And unless we get 3 PD arrays violated to the downside, I'm not going to change my opinion. You see 3 PD arrays in here from the volume imbalance, the swing low, and we got the order block. Okay, that's 3 PD arrays. You also have this breaker. So if this breaker was to push this below those 3 PD arrays, and we were to get back below this 50% aggressively inside this assumed market maker buy model, that's a failed delivery. That price delivery will be failing to deliver that buy model, right? Just simply by seeing some of these indications here. That would then put you in position to think, all right, well, I shouldn't push buys anymore unless it does another thing like this after it was to decline. But that'd make it more likely to want to target the sell side, and we would change our opinion and we would go the other way. And then think of this low to that high and the breakdown as a market maker sell model. And then just continue to do this over and over and over and over again. And you'll be pleasantly surprised at how common this unfolds and how often you could point out these specific elements. Okay, so hopefully all that makes sense. That high on the 21st of November, 2025 is an intermediate term high. It's my target. I'm assuming that you're classifying this high as an intermediate term high because if you go to the quarterly chart, that's a high that's involved with the retracement, right? Relative to this time frame, I would say you're correct. Relative to this time frame, it's a long-term high, right? And we have an intermediate term low here. Okay. But yeah, from a 3-month time frame, that's definitely an intermediate term high from that perspective. Each time frame has its own intermediate term highs, long-term highs, short-term highs. But I just wanted to add that context for you just to make sure that that's known. If you didn't know that, if you knew that, hopefully it's just review. But if you didn't know that, that's what makes classifying the highs and lows a little bit difficult for people. And I go into great detail on that topic from time to time. Definitely in my private group on 101s. But yeah, hopefully that made sense. And hopefully that's what you were thinking. Because in that context, I would agree. Right? In this context, it's a long-term high. And our intermediate term lows are like right here. This was like an intermediate term high here, by the way, right? Lower high to the left, lower high to the right. Price trading into it, right? If you drop down even further, you can start to see that there's short-term highs on both sides, creating the intermediate term high. Intermediate term highs as high as a short-term high. Yeah, that is obviously the textbook way of doing it. Obviously, I mean, there's no like alterations to that, but each time frame has its own context related to that description or that identification of the long-term high, short-term high, intermediate term high. But yeah, you're absolutely right. Intermediate term highs are highs that have a lower high to the left, lower high to the right. And generally, intermediate term highs are nested inside of returns to fair value gaps, which is the easiest identifier to those. ICT mentioned that, I believe he mentioned that in the episode 12 of his 2022 stuff. He didn't classify what I just mentioned, though, unfortunately, that every time frame has its own story when it comes to identifying those types of highs and lows. That's what makes it. He probably didn't mention it because he didn't want to make it more complicated, but that's definitely a reality that we learn over time. Because every time it's fractal, right? Everything's fractal. So the same thing that's happening on the higher time frame has the same components on the lower time frame, just relative to that time frame's price delivery, which all of the lower time frame works inside the higher time frame. Okay, but yeah, you're correct in what your description is, Chowezi. I don't want to confuse you, but long-term high as a high with intermediate term high. Yeah, that's for sure. And so yeah, this being classified as a longer-term high is because as price trades up into that, it's clearly a long-term high, right? Like it's going to take long-term to get up there, and it does have short-term high on this side, short-term high on that side. And again, if you go down to the lower time frames, you start to build more context to it as well. But yeah, essentially, this is definitely a longer-term high, right? It's an intermediate term high relative to the quarterly perspective because it's a high that went into a fair value gap with short-term highs to the left, short-term highs to the right, right? You can see it here. And it also took liquidity up there as well. Makes it even more significant. And it was a soft raid of that buy-side liquidity. Okay, good. Yeah, I was kind of concerned right now, thinking that I might confuse you taking this a little bit deeper because I don't think you've probably heard that explanation. But that's just one of the realities of it that unfortunately wasn't talked about by ICT, and I think it wasn't explained in greater detail because he might be saving things for books. He's already talked about it in some of his charter student commentary. Like these are things that he's discussed already before, but he for some reason he didn't describe it from the 2022 stuff, and I'm pretty confident that he didn't go into greater detail because he knows that it'll trigger in a million more questions and it'll confuse from the basic understanding. It'll kind of pull you away from the clear descriptions that he put from that one time frame that he observed those things on. And he wants us to work inside the higher time frames anyway, right? Because that's most important for bias and narrative. Yeah, I agree. I could see exactly how it was more complex. It's definitely probably the hardest video in that series is understanding that because again, he doesn't go into even greater detail. He doesn't make any supplemental videos like he did with the charter student stuff, with the other commentaries real time, right? And again, that's not in any way part of this skill set, or not in any way a piece of the skill set that will make it so you can never be successful or understand price, just because that's something you maybe didn't nail down right away. Like if you just do the liquidity mapping idea, understand that lows that form inside of a PD array or an inefficiency should not be traded through. If it does it like this here, right? Traded into this, right? It should not get taken out aggressively if we're going to continue to go higher. Same thing if we're going lower, right? If price creates a high like this, right, especially if it's a fractal high, which is what this indicator portrays, and there's a logical reason for you to go lower, it shouldn't trade through that. And if it does trade through that and you use the 3 PDA rule, you can kind of bypass the need for these labels, right? Obviously, it's good to understand all the components and how this stuff operates, because it does have a benefit to understand the intermediate term highs, short-term highs, long-term highs, use cases, and how to identify them. It does help you, right? But just so does everything else, right? Everything has a reason it can help you, right? All the tools. But again, it just goes back to what ICT says all the time. You're going to grab onto what makes sense to you. And with what I do here, I explain that as long as you have an answer to let me pull these up. if you have an answer and a process for all of these different categories that you can define very well, let me see, where the hell did it go? Right there. As long as you can have an answer to these things, whoops, just made it go away. If you can answer all of this stuff, have it well defined, and you can get into the chart and make a decision, and you could call where price is going to go, and you could validate with whatever tools that you have. If something, like one or two of the things that you've learned over the years doesn't make sense, you'll discover that honestly, it's not going to be a make or break to you, right? We don't have to be a library of information to make this work for us. Some things, can also be talked about in different ways, like the functionality of certain things. There's other tools that are taught from ICT that can also kind of not really replace, but supplement uh, the understanding that certain topics gives you. Hopefully that makes sense. Um, but again, that being the facts, right? That being the case, that's why ICT says you don't need to know everything about the concepts. You don't need every single component. Like, people have confusion over like COT and seasonality as well, and some of the other tactics. It's not a be all end all, right? But if you want to continue to grow and elevate your skill set, obviously understanding these more advanced concepts at a pretty decently high level can be very beneficial, as as is the case with anything that you learn at a high level. You know, so yeah, hopefully that statement allows you guys that maybe in the study phase, hopefully it makes you understand that if something doesn't make sense right now, don't think that it's the end of the world. You know, it's not the end of the world. And there's a lot of things that I teach here on this YouTube channel that are very, very easy that also segue into other different topics that ICT talks about. And it's just explained in a more digestible way, I guess, in some cases. ICT does a wonderful job. I don't want to take anything away from him. But yeah, I totally agree, Joezi. Less is more. Absolutely. Less is more. I only have a couple models. I'm not in there swinging at the fences at every model that shows up. I understand all the PD arrays. That doesn't mean that I'm trading every PD array. I have things that I like, things that make sense to me, and a process that makes sense to me where I have pretty much everything I'll ever need. So there's really no need to first of all use everything at once because everything has its place. But some stuff I don't use and it doesn't really stop us. Some of the stuff that I use and showcase is not all the stuff that a lot of my students use, or any person that comes to me. We don't use every single concept all at once. And sometimes there's pieces of the process that I forget to apply, right? And it still doesn't affect anything because everything is just, we're building the narrative. We're building things that help us trust what price is going to do. And all the stuff that we've talked about today definitely allow for clarity to be achieved, right? Especially with bias and narrative. What I described here on this, and just in this chart and in the other one, right, in the bonds and yields, it's universal. It applies to everything, But you can make these concepts as complicated or as simple as you could possibly want. And hopefully you guys see that on these Sunday calls, we have a lot of things that we're doing, but hopefully you see that it's simple to understand. It's not overly complicated. And it's very objective things. Like if 3 PD arrays are violated, price is probably not going to go, in this case, to the buy side. It'll probably look to go to the downside. I mean, that's a fairly simplistic way of viewing bias and narrative, right? I mean, so that means that as long as 3 PD arrays to the downside don't get violated, if it trades lower, I'm still bullish because we've been bullish. And we have a logical target up here. That's obviously an overly simplistic way to put it, but it is pretty solidly encapsulating what we're going to be looking at for bias and narrative for us to continue to trust that this is going to go higher, right? Would you guys agree with that statement? Kind of just highlighting how important and simplistic this could be in terms of the three PD arrays. I do this spread across multiple different concepts too. I try to make them very, very simplistic while keeping the effectiveness that ICT teaches. Yeah, okay, for sure. I appreciate the feedback, Fritz. Yeah, it's a big ship, right? That was probably one of the best analogies, right? It's probably one of the best analogies. We have a lot of analogies. ICT's got me good at analogies, so we got our own analogies too, aside from the ones he uses. We kind of use the ones that he uses too, but but yeah, I think that's definitely was one of the good analogies. Hey, that's good. Yeah, I think that's why analogies and creative things to kind of put a pin in certain concepts or like identifying real world things that are very similar to certain things that we're doing in the market or things that are just like obnoxious but make sense when you're describing something. I think it does a great job of cementing the tactic that's being taught. So I'm glad that that had that effect on you, Fritz. I'm glad because yeah, it's definitely not something you want to forget when you're trading this long term or trading anything long term, um, because higher time frames are moving towards something, and it's got a lot of money moving with it, so they can't be, you know, moving too crazy. Otherwise, it's going to look unstable, and then people get scared and not want to do anything. You know, it's probably more behind it too why it moves slow. It's also a higher time frame view, and the investing world could be a little complex, but yeah. So again, hopefully you guys have made sense of what I've talked about in terms of where I think all these assets are going to go, bonds and yields, now to the DXY. And of course, if DXY is going to go higher, if the bonds are going to go lower, what the hell happened to my currencies chart? Whoops. So yeah, and then, you know, with that being the case, with DXY going higher, bonds going lower, yields going higher, we talked about this last week. I said this was my sell side invalidation because we overlapped the fair value gap. I said, depending on how this trades through, if it trades up and respects this, and then we stay below it, my intention is still to aim for sell side. Now we're hitting an opposing PD array. So we went from this PD array, the inversion fair value gap with this candle, down to this PD array now. So PD array to PD array, right? It's also a previous week's low. Set equal lows there too, right? And we have this trend line liquidity, which is massive. I don't know if I went to the quarterly chart here on the currencies in a while. Let's go kind of see. Oh, what do you guys see here? If this was the 5-minute, what would you be trying to assume price could potentially do? I think that this is pretty reasonable, if you ask me. I think that looks like a pretty reasonable idea. Let's make it black. I mean, this fits hand in hand with all the things that we've talked about with the bonds and yields, DXY, all these different things. You know, it seems like this delivery down into this quarterly fair value gap would make a lot of sense. Would you guys agree in the chat? Those of you that have been with me for a while today. Yeah, we've talked about a lot. So if you guys did show up late, if you didn't have a chance to be here early, I recommend that you definitely dig into some of the earlier conversations, or at least some of the chart related stuff. If you don't like some of the other stuff, you could skip it. But yeah, let me know in the chat if it would make sense. If you think that it would make sense. We took external, looking for internal. Yeah, external out here. It's had small ranges. We're expecting a large range in the near future. So is that large range going to get us down into the gap down here? I honestly, I would say that could be a possibility. We do have a pretty weird correlation going on. There's not really a correlation when it comes to this fair value gap. Looks like there's that cracking correlation there. That may be a problem if we see the bonds get some legs and start moving higher again, and the DXY looks to decline. For now, though, with the DXY accelerating, that puts a lot of downside interest on the foreign currencies. So it's a risk on scenario, the one to put risk on DXY off the other assets, if I'm not mistaken. Let me just go double check if I said that wrong. There's so many things to remember. Sometimes you forget or make a mistake. Let me go make sure. Oh no, that's risk off. My bad. Yeah, risk off. Here, let me actually pull this up for you guys. I made a cool little PDF for it. Right, it's over there in the private group. Some of the types of information over there. But yeah, risk on, risk off. Investors are willing to put risk on other assets opposed to the DXY. That's why it's called risk on. Risk off, investors are willing to put, or to, I should have put, to take risk off of other assets opposed to the DXY. I guess this makes sense too. Risk is willing to put risk off other assets. So getting away from these other assets, well, generally commodities, all this, yeah, this is right. All of it will follow or go against the DXY, but follow each other generally. Okay, and then the bonds also go lower. That's what we're seeing right now. The yields will go higher. That's what we're seeing right now as well, or at least the beginning phase of it. And yeah, this right here is something that's extremely powerful if you guys haven't focused on it. Every week, we're obviously doing a risk on, risk off, higher time frame analysis, forecasting, right? And because this statement is true, that PDF is true, you guys see the result. It is what it is. There's no way around it. We could fight it all we want. There is a small quarterly fair value gap. Yeah, right here. It kind of already traded into it, though. It traded into it. Maybe it comes back down into it. There's a little crack in correlation. So maybe this is like a six sister approach where because the DXY is rallying, this is potentially going to continue. This may just have to catch up. The euro has just been a little bit more unwilling to go lower. They kind of have both been going lower, huh? But yeah, it's been a little bit more unwilling. So yeah. So I do believe we got to pay attention to this wick here. Okay, if we take this, 50% is right there. It's the quarterly wick. So yeah, we'll keep that in mind. We got 25% of it, pretty much where this weekly bullish order block is at. I think it's a 2-week order block, is it? What is it? Oh yeah, I use this because it took out this low. This is the one that took the low out. I didn't want to use that. So yeah, this is like 25% of the quarterly wick as well. And the quarterly wick that we just looked at. So yeah, on its way to that 50% of that quarterly wick, which is all this, we got a weekly bullish order block. It has to break through, right? We have this order block that seems to be respecting, right? It's not even coming close to attempting this wick up here, so we can actually remove that. We had SMT at the highs that we've been talking about. So remember, I've been talking about this since the start of January. Had the SMT up here could be significant. It may continue to push this lower. We also have an S&T on the indices. So we may see that continue to support downside delivery with bullish bonds and bearish yield, or bearish bonds, bullish yields, right? That's going to push these things lower. This continues to support this idea. Okay, so yeah, again, my opinion, at least for now, given all the stuff that we've already talked about with the bullish DXY and everything prior to that, this looks like it may be interested in wanting to go lower. Because we already have this run lower in here, we may still see this go pretty aggressively. It may continue to outpace the downside in the euro. We do have a stop run here and a lack of a stop run here, though. So that also may make it a little bit harder, though, right? Because this, so since this took out the low, it already has taken liquidity. This has a failure to take the liquidity. So that's available. So this may actually get there quicker than this one, right? So let's kind of backtrack on that real quick, right? Because this already took out the liquidity and it came so aggressively to the buy side, and this one failed. We may get down there quicker. Doesn't mean that they both won't drop if the DXY is going higher the way it is. But it's definitely probably going to be a little bit more quick here in this one because it's still got unfinished business while there's business that's already been finished in here on the GBP. It also filled in that quarterly fair value gap, like I said. So this already kind of tapped into it. So this is untapped while this is tapped already. So I think that they're both going to still attempt to get down pretty deeply towards those levels, especially if we get below this weekly wick here and we continue to respect this weekly breaker, right? Which is also a weekly bearish order block, right? Right up in there. So lots of respect to that level up there. So this high to that low, it's being treated as a balanced price range. It's been treated like a balanced price range since back here, right? It's just continued to push. So it kind of gave early sign that it was probably going to, eventually begin a downturn. And now the DXY has opened up the floodgates to the buy side with bullish yields and bearish bonds. This may continue and start to really ramp up going into the better times of the year. All right. So yeah, all the analysis that we did last week seems to continue to hold when it comes to seeing this go lower. So we're going to stick to that. Okay. If I remember correctly, fair value gap maybe visited twice. Not more though. Yeah. The more that it comes back into that type of PD array or an order block as well, it could end up being somewhat of an issue. But it's also kind of, you got to put everything into context too, right? But yeah, more taps into a PD array does not mean that it's more safe. We want one tap and at most maybe two, because that second tap or the first tap may be the first move and the second tap may take out that first tap and then start to rip, basically accumulating. That's what it's doing. The first tap could be accumulation. Second tap could be just manipulation through that first liquidity that was left, and then it rips away from the PD array. But the longer we hang around at a PD array, the less likely it is to hold. That's something universal that ICT has talked about. So yeah, I agree with your statement, Fritz. But yeah, so there's not really much more for me to talk about in terms of this. We've already kind of established a lot of the market sentiment, and it seems like things are going to kick in line with symmetry. Ironically, we're getting out of January, or we're in the last week of January, or one of the last weeks. So we'll see, kind of what it wants to do. We're getting into the better portions of the year. That being like the last week of January, all the way to the summer months. Then it could kind of get a little choppy. And then after the summer months going into like the fourth quarter, it starts to accelerate. And then, sometimes a lot of the time, most of the time, it looks to cap the yearly range either at that fourth quarter or a little bit beyond into the middle portions of that fourth quarter. Okay. So yeah, my opinion is going to stay the same with this. Let's see if this weekly order block can hold, See if we can't get above that. As long as that happens, as long as that continues, we have the trend line liquidity that we're going to target. We have these lows here on these weekly candles. Those are all targets. Same with all these lows here. We have a gap in here. Again, if this was going to go higher, it should not break down through this fair value gap here. It should act as a BPR, come back down, tap it, and then continue to go higher. If we start to slide on through it, that tells you that we're really, really ready to probably target some deep, deep levels. Yeah, maybe not even just this low if we break this. So I would expect that if we're going to be bearish on this. So we don't want to see this hold. We got to watch it when it gets down there for the GBP. But yeah, that's to come, right? That could be looked at as a target though too. It's an inversion, right? So yeah, give me a one in the chat if everything's made sense so far, and then we'll move on to the beautiful indices and then see what we can get into with those assets, given all the context that we have. Okay, got a 1. All right. So I think for these we'll stay on the 3 and then go to individual observations as we move along. Again, I forgot to mention the thing that I mention all the time. When we're looking at whatever time frame, the first liquidity pool that we're using for a day trader or an intraday trader or a weekly range trader, if we're on like the weekly chart, or depending on where you start, right? If you're on the monthly chart or even the quarterly chart, you look at your current high and low and your previous high and low from the previous candle, because it's going to take a long time to get to these far levels. So if you're looking for short-term targeting, that's how you identify them. And then any of the stuff on the liquidity mapping list that I give you guys in the free group and in the private group, right? That's just like easy liquidity mapping ideas. Like, where's this weekly candle going to go, right? If you don't know, which high or low from these previous candles is it more likely to target, right? Is it going to be this high here, the current high, which is basically going to be the previous high, or the previous low, or is it going to be this low, right? Or any of these lows that are in close proximity? Which one makes more sense? That's all you have to be right about, right? Or at least somewhat correct about in terms of targeting for you to have an opportunity week to week, right? All this other stuff is more long-term, and that's going to require more experience. It's going to require more understanding, because longer term, like all year last year, we called bias and narrative on a week-to-week, month-to-month, day-to-day, session-to-session, quarter-to-quarter basis. And that's because we have this huge depth of knowledge about where price is going to go and why, and all the supporting factors and whatnot. But for a new trader, all you got to do is really determine where is it more likely to target. Is it going to target this high because that's kind of close? Or is it going to target this low because that's the closest right there, right? Which is, it's also equal lows. So that kind of goes hand in hand with what we've talked about earlier. We talked about how there may be a likelihood for us to start to see this tip over. This is a concern to me up here with these equal highs up here. I through all of this was wanting to see if we can get up there. Then with all the stuff that we've talked about on the back end, if we tap into these levels, maybe it'll look to dump off from there after it fulfills that, to basically pull them in. They may very well look to use this for a later time. They may build up liquidity aggressively right now, drop it lower, come and sweep up liquidity. And then once they feel they have enough sell side, look to run price up to the buy side and then target this at a later time. Because we are really overextended. We're pretty solidly due for a nasty drop off. We've had a couple of them already. So, but I'm not sure. Maybe something like this will take place like it did last year around this same time. If you remember, in February, January, going into February, April, or March to April, all of that encapsulated this nasty move, which we were ahead of. We called before it happened as well. If you go back to January's live calls, are we going to have something like that take place to maybe wipe out some of this? Maybe, right? This could be the very start of it. We have a gap all the way down here too, right? That was from the last, or one of the last rate cuts, right? One of the rate cuts was in here. and it just was too aggressive, kept going higher. Rate cuts are positive for the U.S. Stock market, obviously, right? So the rate cuts, if we can get some cuts soon, that'll be a bullish symbol or bullish signal, I should say. So we got to be aware of those things. But for now, with all the things that we've talked about today and all these different assets, what they look like they're doing, what the DXY is doing, what we currently see in price so far, especially with the Nasdaq, we may be seeing this turn into a bearish breaker. This is what I'm going to be looking at, right? 50% of the wick here on this wick. We have this bearish breaker here now. Stop run. It is leaving these equal highs, which makes me a little skeptical. But I would say that if this order block here gets violated, that's a double change in state, and I think that's enough for me to think this low is going to be targeted. We may even get deeper if we take this low, because then this candle here will also become a bearish breaker. Low, high, lower low. All right, this one here is just an early move that's inside of this, right? So this breakdown below this is also breaking through multiple PD arrays. We have a fair value gap here. We have the wick in here. If it was to continue to slide through and close below this wick, that's 2. We have the swing low, right? That's 3. And then we'd have this order block being respected, this order block being respected. We'd have this wick here in the 50% level. If it was to not get above it, that's being respected. So we're starting to see bullish PD arrays fail in that regard if it was to break down below this. And multiple PD arrays to the downside that should be holding are now being violated. So I'd be confident that we're going to try to target the sell side. And all the back end stuff that we've talked about today, up to this to this description, what I just talked about right now, all of that brings me clarity, right? And if, of course, that fails to go lower and we were to hold this stuff, right, displace above this potential breaker, I would use that as an inverted breaker candle. If it gets above it, I'd use this wick as support. I'd use this and this fair value gap here as support if we were to get up there, and then I'd look to target the buy side up there. For now, though, I want to see if we can get this to be taken out, given all the sentiment that we just talked about that favors this going lower with DXY going higher, and I'm going to support potentially a change from the bullish sentiment to potentially targeting sell side liquidity. And of course, again, the contingency plan is if it gets above this and we have to get away from that thought process of going lower, I'm going to believe the price is going to continue to go higher, right? If we get above this wick here and this candle specifically, because that'll invert it. Chris, where is the intermediate term high on the daily chart? I would say that the intermediate term high, the intermediate term high for me in this case, right, when we were delivering all up in here, it became this, which was the intermediate term high, because we got a lower high to the left, lower high to the right, return back into this range. There wasn't really much of a fair value gap in there, really. I guess there was. But you have to move around a little bit. But yeah, for now, again, this low here for me is going to be my invalidation for the buy side. Specifically, I'll use this as an early signal, an early indication, right? This was an intermediate term high, which you could see why, right? It was not disrespected. We did break through some of these more short-term highs. We do have our long-term high that ended up being over here, right? Once an intermediate term high forms, like say this was a trade up into a fair value gap, and this was once an intermediate term high, right? Once it breaks down and then creates another intermediate term high with a short-term high to the left, short-term high to the right, a return to a fair value gap, and then we break down below that low that created the run that presented the intermediate term high, this would then shift to a long-term high. So we're getting more into like advanced navigation of identifying these intermediate term highs, short-term highs, long-term highs as price prints and creates new structure. It's obviously not something I'm going to get too deep into right now. I could talk for the next 3 hours just about that concept. But hopefully you kind of get a feel for the fact that these things do shift, they do change, it does roll, right, from one to the other as price prints. And and if we're looking for and if we look at the weekly chart for intermediate term high, I understand. Yeah. So if we look at the weekly chart, if I was going to continue to favor downside, essentially, because this is a short-term high at this moment, because we don't have the short-term highs on the right of this. It does have a return into this. From this time frame, it looks more so that this is a intermediate term high for right now. We got a short-term high, and then of course, if this breaks down below this, this becomes a long-term high. Okay. Instead of a potentially intermediate term high, right? So when an intermediate term high is low, right? Like the structure that creates it, like this run higher, we got a low down below it, and that creates the intermediate term high. We have this one that we can actually adjust and use, right? Because it's lower than this one. If this was to be violated, this becomes a long-term high, and we'll see a pretty nasty move, because long-term highs are not expected to be targeted super quick. They're long-term highs for a reason. It may take a couple months. It may even take a couple years to take out a certain long-term high. Because this is obviously really, really higher time frame. And of course, this high here, if it gets traded up through it, right, that's going to end up taking out this high. And this high gets taken, we're in a pretty solid long-term delivery. And that would potentially leave this as, let's see, if we move down a little bit lower, see if we can classify. It's just a lot of nasty mess in here, really. Let me see, did I miss a question? And if we're on the weekly chart, yeah, hopefully I answered your question right there from that weekly chart. I would assume, or just from what we're looking at here, this is an intermediate term high until this low is taken, right? And if this low is taken, that becomes a long-term high. And then it'll keep on moving, right? Okay, cool. Glad you understood, bro. So yeah, hopefully everything makes sense up until this point as far as what we're looking for with this, given all the context we talked about. I believe that this, if it doesn't hold this as a breaker and it doesn't stay below this wick here on a closing basis, if we do stay below, we'll go lower. And of course, all the back end information that we've talked about throughout this day kind of leads us to that assumption, right? Unless, of course, it gets above this wick, then we're gonna just look at this as a continued crack and correlation across the indices versus the other assets, and someone's lying in that instance. So at some point, it's going to get back in line, and we'll discover who the liar was. But because this is such a higher time frame, because it's such a nasty price delivery at the moment, it may take a little bit of time to discover who's lying. If the NASDAQ and the indices overall continue to march on higher, okay. So yeah. With that being said, my objective initially is going to be to see if we can get down below this. We have previous week's low here. That'll be an initial main target. And if we can get down below this initial main target, my next target goes to the lows here, or the low here, and then the wicks. We do have relative equal lows here, so that's something, I don't know if okay. It's equal lows on a weekly, on a daily basis, but it's also oh no, those are two weekly lows right there. That's interesting. If we zoom this in right here. Yeah, that's interesting. We have a weekly low here and a weekly low there. And that it's 50% of the new week opening gap, which is interesting too. That 50% of that old new week opening gap. It's really sensitive, it seems. So yeah, and then we have a SMT above these highs as well. I just have a bunch of markups from the previous week. We can remove some of this. We already got down below some of those levels that led us to invert this and go lower. Things that built trust for us to go lower. We talked a lot about many things last week. Let me see any significance in that price has respect to consequent question of the quarterly wick and currently just below. The quarterly wick bullish or bearish? Let me go check. Oh, you're talking about this up here? Yeah, I think we talked about that last week. How that's also another reason why I feel like it could look to dump lower, and if it stays below. Yeah, no, yeah, we mentioned that. I think yeah, since I think we started the year mentioning this. One of the first videos, we outlined the whole quarterly wick. We also outlined the yearly wick, which ironically has to do with the last quarter. It just shows you that the fourth quarter is the cap of the yearly range, right? The last quarter presented the wick of the yearly candle last year. Isn't that interesting? It's an interesting observation in here. Yeah, you see? See how it does that? The role that it plays? So it's basically talking about the last quarter's wick plus the yearly wick. It's basically two in the same. You're talking about basically the same thing. So maybe that's something you may have not thought about. It just goes back to the yearly power 3 and how each quarter has a role in the yearly range. But yeah, because we can't close above it, right? Like we talked about, that's a potentially bearish sign, and it's the start of the new year. So if it's going to be a bullish year, it'd be right? It makes sense for us to take a nosedive. And what could we target? We have a beautiful layering effect of this trendline liquidity here that looks ready for the taking. Unfortunately, it's in this little like fake channel thing that retail likes. So everyone's waiting for price to break out of one of these areas. I wanted to see if we can get up above here, sweep this out, take that liquidity as counterparty to then target sell side. If it was going to look to sell off, we may not get that though. If this is going to continue and do what I mentioned. And again, we do got SMT here that's also supportive of this. So yeah, give me one in the chat if everything makes sense as far as what we believe price is going to do overall. Just across the board, hopefully this very deep breakdown of everything that I'm thinking about that gets me to believe that indices are going to go lower. Hopefully all that stuff makes sense. See, there's a lot more details that we can cover when we do these long videos versus like the small ones, catering to those that may not want to sit and listen to all the massive details. They just want me to tell them when to buy and sell and what's the bias without putting the effort in. Then some people don't got time too, so I feel for them. But yeah, let me see, Chris. All right. Well, yeah, where the hell is my S&T thing? Am I blind or something? Where did I put it? Oh, right there. There it is. Geez, that took way too much effort. What a mess. Yeah, we caught that move. We called that move lower. Spectacular. I think I shared it in the free group too. I think I put the markup up and what I was waiting for when it happened, or a little bit before. But yeah, look, you see these highs up here. If you go up and around, you see that there's SMT there. You saw that? Yeah, we got it with the Dow too. The Dow is a strength leader. It, I'm not sure what has made the Dow such a strength leader. We had SMT here bullish. We have another SMT here where the highs are being traded through while the other ones are failing. We have the other ones making lower lows while this one's making higher lows. I'm not too sure what's driving this to be so much more excited than the other ones. I'm not too sure, but I don't trade the Dow, so that just tells me that these are probably going to take a massive nosedive, right? Yeah, Tony, I agree. I agree with you, bro. I completely agree. You guys get, you get rewarded when you hang around on calls like this. You guys get all the information that I think you get, like the most thorough explanation of my thought process. And of course, we talk about some other things here and there that aren't related to trading and whatnot. But a lot of it always refers back to why it's important to trading. And you just get a thorough explanation, and I don't feel like I have to rush, to or try to jam pack a very small, short video with things that are just, they deserve more of an explanation. Like 5-minute videos are just retarded. Sometimes even, like 20-minute videos at times can be can feel not as complete, at least for me. Because there's a lot of intricate details. Like I'll explain one thing and then it's like that thing also relates to another thing. So I want to make sure that it's mentioned so we know that like where everything aligns and how everything fits together. It's just sometimes things just need more of an explanation because there's so much of a depth of knowledge. So, you don't get lost. And I'd like to be here so I can answer the question right away, so then I don't have you guys stuck being confused, because the whole point of this channel is to bring you from confusion to clarity, right? And I can't do that with really, really short videos, because clarity is achieved through hard work and very detailed understanding, so then you can simplify later because you have a deep understanding. Let me see, excuse me. Confluence, what I already have marked up. Excuse me. My bad. Hope I didn't just blow your ears out. I don't know what the heck's wrong with me. Yeah, I think this time I might be getting sick. I think I said the other day, or I said it this morning too. I always think I'm getting sick, but then I don't. I think I might be getting sick actually. Let me see. But like I was about to say, Tony, I like when you guys tell me that. Confluence for what I already have marked up. You already do a markup, and then you get on a call with me, and then you compare and contrast. That's how you can gauge where your knowledge is at. If you think that my opinion is worth listening to, if you think that what I've shown publicly has proven itself by being correct almost every single week, with a high level of understanding and things are making sense. If you think that, then you doing markups first and then coming to these videos after you do a markup, just to compare and contrast, and then you see things start to align. It's a very, very good way to do it. That's how ICT does it. That's how he did it in his private group. He would send out markups. He would tell us to do our markup first and then come onto the video. And he always said that if you don't do it that way, you're doing yourself a disservice. You're not gauging. You're just looking for the answers right away. You're not allowing the skill set to marinate in you, and you're not allowing yourself to build trust in you. Because eventually, when you can see things before it's even talked about, right? And I'm like calling this and calling that, but you saw it ahead of time. That's how you can gauge whether you're in graduation mode or not. Whether you can get on the chart and do it yourself without really doubting yourself or not. Just on your own. That's graduation mode. That's when you know that you are pretty solidly well on your way to being independent. And that's, again, what I try to cultivate here. And then so eventually, those of you that do hang around with me, you end up hanging around because you like the community. and you want to maybe help me have an impact on others as well. Um, and just continue to be around good traders that keep you accountable. I don't ever overtrade and over leverage. And I think it's ridiculous to do anything like that. We don't have false expectations. We have realistic ideas, effective ideas, things that work. It all makes sense. And we don't really get fooled from price, So having a community like that, even when you're good, it's a good thing to have as a resource, especially when there's not a lot of lifestyle stuff and all this distracting stuff that can get you away from what the real goal is, which is to live life without needing to worry about a job or a boss or anything that happens in the world, right? Gas prices going up and all this. You won't have to worry about that if you're good at trading. It outpaces inflation. When you're making, $500 in like almost every day, a couple times a week or more, right? Sometimes you make more. Are you really going to be too concerned about like what's going on? Like, who cares? Especially when you're making like $1,000 a day, right? Or you get to a level where you're making even more. Do you really think that once you achieve that level, which you can, but it's going to be up to you, obviously, it's not up to me if that happens. But once you hit that level, if and when you do, are you really going to be too concerned? No. You're not going to be worried about it. So yeah, it's just one of those things, right? Let me see. Did I miss a question? I think I missed a question. Just distracted me thinking, oh no, I didn't miss that question. Let me see. Tony said, I'm looking into these. I'm looking into trading these 3 assets this year. Are you talking about all 3 indices? You change your forex pairs. Yeah, currencies. I don't know if I could trade currencies anymore. I've been thinking about it because we've been calling the currencies very, very accurately. All these assets that you guys see me talk about every week, it does what we think it's going to do. Whether it's the bonds, yields, gold, currencies, if it's crypto, doesn't matter what it is. Anything that we touch or look at, it's all doing the same stuff. So because that's the case, and nothing's random, and it's all ran by pretty much the same algorithm, or at least the same logic, that's why we could hop around from anything and we could figure out where it's going to go. Generally, it's all the same. It's liquidity and inefficiency. It's literally all it is. And it never is going to change unless liquidity and inefficiencies disappear somehow. And that's not going to happen because that's literally what the market is. It's literally, it's just what it does. Now it seems if tomorrow doesn't break Friday's high, we may have a mid-term high confirmation of bearish intent. Let me see on the time frame. So one of the easiest ways to identify an intermediate term high, Fritz, or an intermediate term low, is to identify highs and lows that trade into fair value gaps and leave them, right? Because a trade into a fair value gap like this low here, like that's an intermediate term low in itself. Trading into a fair value gap, we have a low here, a low here. It's basically a fractal low as well. So a fractal low here, and then itself is a fractal low inside of the fair value gap, right? Unless that's taken, right, it should hold. That's the characteristic of the intermediate term high or intermediate term low. If you want to keep it like very, very simple, that is essentially what you can be thinking of when you think of intermediate term highs and lows. That's like the easiest way, and that's how ICT teaches it, right? He mentions that specifically and puts a lot of emphasis on that, because if you can nail that down, you're basically understanding what highs and lows should hold. And then you merge that with the 3 PD arrays, right? The 3 PDA rule. And then how inversion fair value gaps and inverted levels or PD arrays turn to inversions. And then intermarket relationships, you can start to see how, you can have a pretty solid understanding, even if you don't quite understand how to identify like long-term highs and short-term highs perfectly. You don't need to be perfect, but if you can understand this intermediate term highs and lows and simply use it the way that I just described, that could be enough. I have some students that simply, when it comes to this topic, use it in just that way, and they do just fine. Because it can get real. You can get real overly complicated when it comes to the identification of the long-term highs, short-term highs, intermediate-term highs. Whole idea, the way that ICT has talked about it, it's very easy to get lost in the sauce, and a lot of it has to do with experience, right? Like being able to look at these things for enough time, right? Like this specific topic, classifying the highs and lows. But the most significant one is going to be the intermediate term high and low, and that's on every time frame, because it should have the same principle in every time frame. It's the same thing here, right, on this higher time frame as it is on the 5-minute, right? If you see a fair value gap that gets traded into and the narrative is bearish, and you're trading into a bearish fair value gap and price pushes away from it, if you're going to be bearish, that should still remain intact. And if you could see a fractal high to the left, fractal high to the right of that high that went into that 5-minute fair value gap on that 5-minute chart, you shouldn't see it come back into that, right? You could take that and then also use the 3 PDA idea, couple it with that, and you have a pretty solid validation principle. And so as long as those levels hold, you could continue to push price, especially if you're doing it on the higher time frame, or if you're doing this with an idea that you just took an execution on in that lower time frame, or like a setup from the 5-minute, right? So on and so forth. It's all fractal. Right, but yeah, it's pretty much all I have for you guys today. We got through everything. A little bit longer video than usual. I appreciate you guys hanging with me. You guys get rewarded when you hang around, and we have these conversations. It's a lot more thorough. It's a lot less like me just giving you where price is going to go, right? If I can give you where price is going to go, but what else allows me to trust it? What else allows me to be clear and have clarity as far as why I should be able to trust that specific move, or that specific narrative, or that specific level, right? So yeah, appreciate you saying that, Tony. I'm glad you feel that way. Fritz, you're welcome. And again, thank you guys so much for all the love and support. Don't forget to like the video, subscribe to the channel. If you have anyone that you think could benefit from this, that who is a trader, whether it's someone you know on Instagram, or if you know them in real life and you're just trying to get them into trading, if you could spread the word, that'd be awesome, because that means that there's more lives that we can impact. And, in that regard, we're doing this together. We're impacting lives together, okay? As you guys help me get in front of people by liking the video, subscribing to the channel, spreading the word. You guys are pretty much in this mission with me, and the better you guys get, the more you can pass along the blessing. And I think that's kind of something that I want to see continue into the future, right? Only if you guys are open to letting yourself be available like that at some point. And if not, save it for your family, right? Teach your family at most, if that's something, if that's the only thing that you could see yourself doing, okay? But yeah, again, thank you guys so much. Appreciate you guys for the love and support. And I will be live again on Tuesday. I'll do it like maybe 5, maybe 6. I think I have it set for 6 for right now, but yeah. Dang. Hey, and that sacrifice. Fritz and Chawezi said they got what? Alarm for work goes off in 6. You have only 6 hours left till you got to go to work. That is amazing. That is dedication right there. So, yeah, I won't keep you guys much longer. Y'all need to go to bed. Y'all need to go to sleep. But yeah, with that being said, God bless you guys, and I will catch you beautiful people on Tuesday for our next live trading call. Thank you guys again for the love and support, and I will see you guys on the next one. Have a good rest, good sleep, and a good day, you guys. Fritz and Chawezi, or anyone else that it's super late and you guys have sacrificed to stay up. I really appreciate the support and interest. All right. So